Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video. Good morning, everybody. Happy Monday. Hope you're doing well. Hope you guys had a nice weekend and are prepped for another crazy week ahead. Guys, can I rant for just a second? What the heck, man? Like, how many times? How many times? The Friday evening, right after the stock market closes, we get some insane headlines. Essentially, all bets are off. Iran and US are swearing war on each other again. And then, like pixie dust, like perfect timing, Sunday, right before the stock market's going to open up again, or the futures market's going to open up again, US and Iran are going to meet. Like, is that not, and it's not like, oh, this is like one-time occurrence. This has gone like months on end. It's unbelievable. Like, it's almost, again, I'm not here to tinfoil hat or conspiracy theory. I can't state any sort of definitive claims, but come on, man. Like, could you be more obvious of what is going on here? Every Friday, bad news right as the market closes, but before the market can open up, some resolution. It's like we are seeing, like, we're at war on the weekends and we're peacetime during the week. Like, it's unbelievable. It doesn't even feel real. Anyways, what can you do about it? You can only manage your risk and make educated guesses. That is it. Do you go live every day? Hey, Chris, good to see you again here, my friend. Yes, we are here Monday through Friday. And can I just share, if you're enjoying these shows, for anyone who is here, if you like my content, if this stuff is helpful to you, we are live Monday through Friday. You can hit the notification bell on YouTube if you're watching there. If you're watching on Twitter or anywhere else, if you head over to our website, a1trading.com, you can always see if we're live up here. Pretty cool little widget there. But also what you can do is you can actually go right here under resources. We have a live stream schedule. Anytime you want to check who's on, or if you just want to watch the stream from here, by the way, you can see our schedule right here. We have a list of creators. We are live for multiple hours per day during the work week, trading the markets, watching things, giving you guys updates. It is all free. All we ask is that you make sure to follow, subscribe, thumbs up, just support our work. It really helps us out. Okay, so a couple things here. Gold, first and foremost, what's going on with gold since we last spoke? If you watched my video over the Sunday market, guys, my video, 100,000 views. That does not happen to this little channel. So thank you very much to everybody who tuned in to my Sunday video. My video on YouTube got 75,000 views, and on Twitter, it got 25,000 views. Unbelievable. Like, that is so cool. What's not so cool is what happens when you get, like, really, when a video kind of goes semi-viral, which for me, that's a lot of views. For some people, I know that may not be that many, but for me, that's a lot of views. And you get some really, some really interesting people start to flow in when you get those sort of, numbers on a video. You get all sorts of very heated people, very, very interesting walks of life that have a lot to say. But hey, you know what? I'm just glad that you're here, etc. Little channel, bro, has 500K. I know it's not a little channel, but it's a little distorted, okay? Because YouTube, trading YouTube is a little bit weird. It churns a lot of people. Like, unfortunately, this is the reality of this industry. Most people who are watching right now, unfortunately, will not be trading in a year from now. If you are planning on trading from a year from now, consider subscribing. But a lot of people who have subscribed to me in the past no longer trade. They realized how hard it was. it's a kind of a grim reality of trading. It's not for the faint of heart. It is hard work. And I hope that if you watch my videos and streams, I can help you in that journey as I continue to go on my own and share thoughts about it. Let's get started. Yes, bro, let's get started. Sorry. Let's get into it. Okay, so gold, I do have my short position is still on. Sitting in the position here, I have got, I came really close to getting trailed out for a profit on this position, but I'm still in it, and I'm going to let this thing keep rolling. So if we do bottom out today, intraday, if we start to push through here, time to cut the trade. I'm out of there. But then I talked about two scenarios in which I might get back into a gold short trade. Let me explain where I'm at with that now. So if we roll over, first and foremost, if this trade continues, I am looking for a break through the lows. Okay, that's a clear signal that the trend continuation is still there, that we look good, that sellers are still in full control. So scenario one is very easy. I do nothing, and I look for an opportunity actually to trail a stop loss. Let me just map out a scenario on how that might look. Let's just say that we push lower, that we do something like this, right? And then we ultimately drop through those lows. What I would probably do in that circumstance is take my stop loss and probably bring it right on through right here. Okay. So that's the good scenario. Like if gold rolls over here and the short side continuation works out really nicely, that's what I'm going to do with my position. Let's also acknowledge what could happen if I am, if we see a short-term bottom here forming for gold. If we start putting in some kind of a higher low here on the 4-hour and we break through, then obviously it is time for my position here to cut that trade, take profits on this. That would be so far year to date. I think that is, well, actually technically no, because I closed my gold longs early January, and that was the biggest trade I have ever had. So technically that's the biggest trade of the year, but I started that trade in December. So I guess the best trade I have had so far this year that started this year would be this gold short position. So if we break here, that's going to close out. We're out of the trade. We'll take our profits and reset. From there, am I still bearish gold? From a macro perspective, which I will get into in a moment if you stick with me here, yes, I will stay bearish on gold because I still think the dollar looks really solid. And I like two levels, the 61.8 and the 38.2% retracement. Nothing fancy there, no magic candlestick patterns or anything like that. I like the downtrend. I think you're on a 4-hour and daily downtrend. So I'll take a stab at the short side again. But then somebody asked me, they said, Nick, you would take a short position like really quick right after getting stopped out. Yes, and this is where sizing comes in, right? Because I would size down. This has been a phenomenal move. But I do think that the risk reward was much sweeter when you had this sharp rally that I personally thought was overdone, and the gap up I thought would close. Like I liked that trade setup a lot more to the short side. Do I still like the 38.2% retracement for another short? Yes, but like I said, I would size this thing down personally. That's how I'm handling it. Now, just a quick reminder, this is not financial advice. I'm doing my own thing here. I'm sharing my thoughts, opinions, and what I'm doing in markets. People ask me every single day, guys. I get the question, Nick, is it a good time to sell gold? Is it a good time to buy gold? Should I cover my short? Should I cover my long? And my snarky, annoying, know-it-all answer is to say, what does your back testing tell you to do with a strategy that you've spent a lot of time building? Because I know what a lot of those people, their true answer would be, oh, I don't have a strategy. That's the problem, okay? I'm not here telling anyone else what to do with their account. I've been trading for 10 years. I trade. I do it every day. I talk about it on YouTube because I enjoy creating content and I have a business around this stuff. Like that's the reality. I enjoy making content. I would do this stuff completely for free because I just love the community, but I also have a business around it. So I'm not going to act like it's charity work here. And I don't claim to be anybody's mentor. I'm just doing my thing. Anyways, I do like the short continuation on a move up to 41.20. And in a second, guys, if you stick with me here, we're going to look at where we actually could go. Like how far down could gold go before it's like, okay, this is too far down. And the answer, by the way, is there is never a case in which it's too far down. Markets can always surprise you. Do you prefer swing trading or day trading? I prefer swing trading. I'm not a day trader. Nick's COT data. Yeah, that's a good idea. Maybe we can get to that. Definitely would be great. Guys, do me a quick favor. I'll keep going. If you could do me a solid and hit the thumbs up button, subscribe, all that good stuff. Appreciate you on that. Look, so I would potentially rejoin if we get stopped out as soon as potentially the 38.2% retracement with a smaller size. This is a big position for me currently. Like this is maximum allocation, which is amazing that I'm in a max allocation for my trade size. And those are personal rules. So I'm telling you that I would probably re-enter the trade with a smaller size, but how you choose to enter your sizing, what risk you put on, et cetera, that is very personal. I can't tell you what to do with your account. I never tell anyone what to do with their account. I like the idea of potentially re-entering another short, fresh short with a smaller size. I also like the idea of selling again, trying a second time at the 61.8% retracement. If that works, if either one of these works, I'll try and hold on to it. But this is scenario 2 and scenario 3. If you're just tuning in, scenario 1 was we just keep going, right? And at that point, we just trail stops and we let this thing continue to run. That's how I am planning to play gold. What if I'm completely wrong? What if I'm so wrong and the bottom is in and I am on the absolute wrong side of this and something changes in the narrative and gold is ripping from here? Then stop outs and reset, and that's it. There's no, I could be wrong. Like acknowledging here that we just did every scenario, okay? Every scenario has been covered. I know what I'm going to do in every single one of these scenarios. Obviously, the ideal scenario is 1, 2, or 3. But scenario 4 is entirely possible. I could be wrong, okay? Does that make sense? Are we on the same page with that? Does that if that is all good, then give me a thumbs up button, all that good stuff. Okay, so that's kind of my outlook on price action wise. Real quick, we'll also take a look at the commitment of traders data just to see what happened with gold and US dollar. So interestingly, they actually added stock positioning, which is fascinating. SPX got some longs going on. Dow Jones, they added longs. South African Rand, treasuries. On gold, institutional money added shorts. Actually, let's take a closer look at gold here. I just want to zoom a little closer in on this. So if I go, where do I want to go? I want to go COT data history. We can look at the dollar in a moment, but let's look at gold first. So gold continues to, generally speaking, still have a lot of institutional accumulation. However, let's take a look at this. We can see that the latest report came in June 26th. That's the latest available data. That's Friday. And they had a net decrease. So what did they do? They added longs, but they added shorts as well. And the net exposure, the net positioning shifted more bearish because we already know institutions are already very long gold. So them adding an equal amount or roughly equal amount of shorts proportionally brings that ratio down. That's how that's read, if that makes sense. So if we go to our asset scorecard for gold, this is continuing to show very solid readings to the downside, very bearish. All right, so let's just take a look at the COT data. Latest buys and sells, institutions more maneuvered in the bearish direction. Net positioning, however, remains bullish. So now I want to transition to what I said I would talk about with gold, which is like longer term, if we're still on the short trade for a while, how far lower do we really go? And for that, I want to like actually zoom out to the weekly for just a second. So you have some levels here. This is maybe your most near-term obvious level. And dang, do you guys see how straight I drew that line? It's almost like I've been doing this for too long. 39.28. Okay, so we're looking at like maybe a retest as far down as 3,900 within the realm of possibility. Remember, guys, you are in a downtrend here. Like you are in a downtrend. So the path of least resistance is probably to go find support at some major levels. So this is not out of the question. But understand, I've been seeing a lot of people say 3,500. Yeah, look at this. We got 3,500s in the chat, okay? Take a look at this. 3,500. 3,500 is like right here. And that makes sense, right? Like from a longer term basis, could gold head down there? It certainly could. Now, that's actually like 3,450. 3,450 sounds crazy when we were trading at 5,600 not 6 months ago. But is that possible? Absolutely it is. Markets love to squeeze max pain out of people. That sounds grim and evil and wrong, but look, markets are not a kind place, all right? A lot of people got very hyped about gold, very excited. I've watched gold. I've gone to physical gold bullion dealers in my life with my dad growing up as young as like 10 years old. I went to one in this general vicinity. It was packed. Whereas for years prior, nobody goes to those things. It's like only old people, right? Only old people go to gold, silver, and gold bullion. Like I'm talking physical dealerships. Nobody goes to those things for so long in my lifetime. Then suddenly, when gold and silver are going straight up, everyone's piled in. Like young people are there. Like for a while, I never saw someone my age at those sorts of things. Suddenly, they're all there. And I'm thinking, uh-oh, wait a second. This is the cool thing now. It's hype. Sure enough, markets love to extract max pain. So it punished all that hype, all the hype buyers. And if that was you, I'm not trying to dog you or make you feel bad. It's just what markets do. It's normal to get excited when things are moving exciting, right? It's normal. You're not, dumb or not human if you got caught up in the hype. It's a very normal learning experience for traders. One of the things I would say is that if you are somebody listening to this right now and you're like, yeah, I got caught up in the hype, like if you can full stop admit I chased hype, it did not end well for me. The best thing you could possibly do is acknowledge and accept that you might have made a mistake, that you might have chased something that was quite literally shiny, and learn from it. Because I've done that. We've all done that. Everyone who's here, you're not dumb or lesser than if you made a mistake chasing hype. Markets are a psychologically challenging environment to make money because it preys on the natural psychology of human beings. You're not abnormal if you got caught up in hype. Okay? So can gold continue moving lower? Absolutely it can. Does it have to? No, I'm not saying like, oh yeah, 3,450 is inevitable. I'm just saying if we're looking left and we're building a logical, like, where could this thing go? If the idea of 3,450 terrifies you because you're leveraged long, think about it. Maybe consider what you're doing, because this is very possible to happen. It is very possible for gold to continue to move lower. And at that point, like I'm going to say, I'm willing to say, I think if price is down here, I think gold is a great buy for myself, long-term, not financial advice. I think it's cheap at that level. Like I think that's a great spot where I'm buying gold, but it does not mean that that is certainly like it can't go lower. Like understand, markets can do whatever the heck they want. They don't always trade on intrinsic real world value, right? Just like this was clearly, and in hindsight, right, a lot of euphoria was going on and gold, was getting, everybody was hyped up about gold. It takes some time for sometimes the market to update and reflect what's going on. So even though, yeah, long term, I think gold's a nice place to park some fiat currency personally. I still think that in the short term, you could see this thing move lower and continue to play the downside. And sure, maybe it's undervalued right now. That does not mean that for 6 months, it can't continue to delve deep into a longer term retracement simply because it's out of favor, right? So I continue to be in that odd space where I am short-term bearish on gold and long-term bullish. I hope that makes sense. Would you buy gold there if Edge Finder's bias is in bearish? So Duranto, yeah. So that's a great question. So Edge Finder's mostly short-term. It's not an investor's tool. I would say that if you are considering Edgefinder, know that this is for day traders. It is for swing traders. It is for position traders. It is not so much for long-term investors. Now, I'll say this, you can still use it for sourcing data for long-term investing. If you want to look through, what retail sales or GDP numbers or CPI, like if you want to monitor that stuff for long-term investing, sure, you can absolutely use it that way. But as a tool, it is mostly tailored for active trading. So Edgefinder getting a very bearish reading, this is a no-go for short-term bullish positioning. You will not catch me taking short-term gold bets to the long side. Will you maybe see me buying a little bit of gold ETFs to stick in my portfolio for the long term? If it keeps going lower, yes, but that is not a short-term trade. That's something I'm saying I'm holding it for at least 6 months, more likely for multiple years. That's different than what we're talking about here from an active trading perspective. From an active trading perspective, gold bearish is the play for me right now. So on rips, I'm a seller until something changes here. I'm just following the macro trend. The macro trend here, guys, is just straight up bearish gold, because, at least from Edgefinder's perspective, because you have economic growth that has beat on all cylinders, all 5 categories, stronger than expected, PMI is better than expected, GDP better than expected, CPI neutral, PPI hot, that's bearish for gold, higher inflation, we talk about every time, people always get confused by this. Higher inflation in the short term is a bearish catalyst. It causes the Fed to raise or hold interest rates more elevated. That makes dollars more attractive to hold. Stronger dollar, weaker gold. PCE neutral, 2-year yields generally trending higher. Non-farm payroll, way hotter than expected. That's strong economic growth, stronger than expected economic growth. Let me clarify. I know it's like a trigger word when I say the economy is strong. I'm not saying necessarily that everybody is doing great and it's all jolly. I'm saying that versus expectations, economic metrics have been coming in better than what forecasts have been. That is an objective statistic, right? I'm just going off of Wall Street economic forecasts versus what's actually showing up. Our data pulls it all in, sources it into a scored metric, and populates it right here. So fundamentals continue to suggest bearishness for gold, and conversely, bullishness for the dollar. We haven't even touched the dollar yet. Let's talk about it. Gold, like, dude, the dollar has been breaking our scale here. Like, we are going to have to expand how high this score visual goes, because the dollar has been so strong for all of, well, a chunk of May and all of June, and just keeps going and going and going. I think your next play to watch out for on the dollar index is to look for this, right? To look for that break head and shoulders above this prior longer term level of resistance. So this is a probable bias tool. So it's a tool. The Edgefinder tracks a bunch of stuff, screens it into a score metrics or score matrix here. It tracks what's going on fundamental analysis, sentiment and commitment of traders reports. So we're tracking institutions and we're tracking crowd. We're tracking the technical score, which is just a look at seasonal trends, as well as the 4-hour and daily chart trend. And it builds an overall bias that I then use to factor into my analysis of the product or of the underlying, in this case, the US dollar. We track a ton of stuff. We have major currencies. We have commodities, silver, gold, oil, platinum, copper, and one other. There's something else. But and then we have a bunch of global indices, and we have US indices. So all of this. Another one that I really am interested in is this oil blowout and score that's recently taken place. Do I want to be long oil? So here's a good example of a scenario in which Edgefinder says bullish, but for me, I've got to see something here. I don't like this chart to the long side. I'll just be straight up. I like what Edgefinder is finding. I like the fundamentals. It makes sense here. I get this. Economic growth, upbeat. Jobs market, upbeat. I want to be long oil, but I want to be long oil when the price action agrees with this, right? Edgefinder's off the charts, no pun intended. I like that one. Very nice, Dennis. Very nice. I think I want to just see this thing start to reverse a little bit. Like I want to see some strength come into this chart, key levels being broken. Like I want to see this. And then I may actually be looking at oil longs. So I do have a bullish bias on oil, but I do not like the chart as of yet, right? So I'm going to keep watching it because I do think oil, for me personally, not telling anyone else what to do, I think oil is a buy. I'm just looking for the right time where I can structure a trade. Well, do you age at all? Man, if I go look at my old videos, freaks me out. Not going to lie. I am getting older and, you know, gracefully. I'm married. We've got a home. Life is good, man. But yeah, we're all getting older. Anyways, yeah, dollar index continues. I'm going to be 30 this year, guys. That's freaky for me. 30 is like you have left the baby crib. Okay. You are no longer a child. And, you know, at heart, I'll always be a child, but man, it is a bizarre concept. Anyways, silver, people have been asking me to take a look at silver too. I do like silver to the short side as well, but would probably be waiting for a move back up into the mid 60s. I think silver's a little oversold in the short term personally, but no trades for me there. Stocks, haven't even looked at stocks this morning. They're tempting me. They are certainly tempting me. I want the longs, but I want them to come to me. So no trade for me on stocks today, but watching for the further retracement. Wait, what? First time I've seen a married trader? What? Man, I've been with my wife we've been married for almost 4 years, but together for 11. So yeah, it's my entirety of my YouTube channel. I've been not married, but with the same wonderful lady. Anyways, what else do we have? Bitcoin. So here's another one, right? Bitcoin, don't point any weapons at me, but I kind of want to be long Bitcoin as well. I mean, bruh, like +9 going on here. Fundamentals, like economic growth upbeat, jobs okay. It's just so out of favor and technicals look so whack that I'm not going to touch it, but I'm waiting. Like oil, I've got 2 pending ideas. Bitcoin hitting a major long-term level. This 60,000 level, come back in 6 months, maybe I'm dead wrong, but I feel like 60,000 is generally a huge psychological level for the crypto crowd. It was the topping point in 2021, 2022. We broke out, retested it. I mean, this is long-term stuff. But from a trading perspective, I do not like the short-term charts. But I am very intrigued by Bitcoin longs if things were to start to materially strengthen. Like if you were to see like a big up, I don't care to catch the first move. I'm looking to catch like something like this. Like if we show signs of strength here, could potentially be looking at Bitcoin longs, but I'm going to watch it. So guys, I just want to also mention that we just kicked off our summer sale for the Edge Finder. Edge Finder is currently 40% off. I'm going to switch something on the screen right now so that you can get some info on this really quick. Hold on. Let me find it. Here it is. Okay. So we just kicked off, like last month, we did our VIP memberships were discounted. Now we are doing our Edge Finder sale, which this is the biggest discount that we offer all year long, is a 40% off discount on Edge Finder. So if you've been thinking about it for a while, if you've been watching my videos, you're like, okay, this tool's cool. I get it. I want to be a fundamentals trader. Nick is so awesome. I want to be just like Nick. I know every single person's thinking that, but to do that, you need to have an Edge Finder copy. So, and I'm being sarcastic. I'm pretty cool, but not that cool. Okay. So if you guys want an Edge Finder copy, it's 40% off. It's the biggest discount that we do all year long. Information for that: scan the QR code, speak to a member of our team, because what we can do for you, we have had a lot of people who are like, okay, I want Edge Finder. I want the sale. Can you split it up into a few payments for me? Like monthly payments. We have now launched that as a feature on our website. You can go to a1trading.com and explore that as an option at checkout. Or if you have questions, if you need help, if you need to clarify something, if you need our free course, if you want to try it first, scan this QR code that is right below my screen here, speak to a member of our support team, and they can set you up with whatever you need. It's a real person. It's not a robot. We have staff here that is ready to help answer any questions that you might have about the tool, how it functions, etc. So don't miss it because our sale just started. We've got a massive, massive discount going on. It is our biggest discount price of the year on Edgefinder. So whether you trade gold, silver, commodities, indices, I do also want to clarify just 2 really frequent questions that we get. Is this for day traders or swing traders or position traders? The answer is yes to all of those. The Edgefinder, when you see something like this, right? Hopefully you pick this up if you watch my videos. A very bullish reading on Edgefinder is not a go buy it on the 1-minute chart or go buy it on the daily chart. It's not telling you to go buy this thing. It's telling you that the matrix of stuff that we have here, the economic growth metrics, institutional activity, technical bias, inflation bias, are generally suggesting bullishness. That's not a time frame specific call. It's not a 1-hour chart based signal. It is not a 4-hour chart based signal. It is a reading of all of these metrics into a single scoring mechanism. It's useful. We have day traders using this stuff. We have swing traders using this stuff. The point is it helps you to align with macro fundamentals without having a PhD in economics. A lot of people who watch this stuff recognize economic data, understanding macro is very powerful, but having the right tools is why we're in business. We're a 10-person team behind the scenes here at A1, making this stuff more accessible to the average retail trader. And like I said, our products are on super sale right now. Don't miss the sale. Link is right below here. Up next, we have Mr. James Lane taking over the stream. He's going to be taking a look at some trading setups with you guys here. I'm going to play a quick ad break, and then we are on to his stream segment. Don't go anywhere because he is up right after this. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live. That's A1 Live for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello. Happy Monday, ladies and gentlemen. Hope everyone is well. I just saw a message saying, can't believe Nick's 30, always thought you're 40. I think you probably just ruined Nick's week with that comment. What a horrible thing to say. Anyway, hope everyone's doing well. Hope you all enjoyed your weekends. So what's going on? Week ruined. Yeah, what a mean thing to say. So yeah, what's going on this week? Not much, in my opinion. I think we're relatively stable. There was some headlines over the weekend, nothing overly important. I got called out for that. I made my Sunday video yesterday and completely missed the Iran situation. You know, Iran and America started going back and forth. However, woke up this morning and it's completely undone. Well, sorry, not completely undone, but there is a meeting in Doha. I think if that's correct, but yeah, it's seeming like it's a null and void event. As you know, as I tell you guys, the market's moving themes. As far as I can tell, the markets don't really care about Iran anymore. It's old news, unless there is really something that kicks up and really does start disrupting something again. I think until that happens, or we get a complete de-escalation, it's really not a huge problem. It's more a case of dollar dominance is the main market theme and the main market driver right now, and that's what I'm going to focus on. You're also fake. Barry Allen, why is that? Bots in the chat? I don't think there is any bots at the minute. We've had some. They try and get you into a Discord. Try and groom you in Discord. It's really not cool. Hi, Anario162. Hello to you as well. I mean, he has so much wisdom for his age. It's okay, Basil. Don't worry. We all know what you meant. You've hurt his feelings. It's done. It's insider trades that ruin it for everyone. The rich get richer and the poor get poorer. I don't know about that. Kind of, yeah, I suppose it depends. I don't really lean either way on that side of things. Anyway, let's go on to the markets. As I said, there's not really much going on for me. I closed euro dollar last week, so I'm just waiting for a pullback to get back in. So I've got a pending order at not 1500, at 1.15. I got a take profit, not actually looking for this level yet, but that's where I'm marking up at 1.05, a stop loss at 1.162, just because I think relatively round numbers, they're pretty slick in this this specific setup. But other than that, I'm pretty relaxed. I'm currently in a DAX long, almost break even, slightly underwater. You know, this position, the first one here is in drawdown. This one's in just a tiny bit of profit, but either way, it's not doing too much right now. And I'm in a Euro Swiss long that, again, isn't doing anything. So I'm starting this week pretty chilled out, nothing going on. So yeah, I'm quite happy to go through whatever you guys want, because I'm not leaning either way other than dollar longs. Christian, hello. Non-farm is on Thursday. It is indeed. Yeah. We did actually get a headline from, oops, hold on. I've just lost it. Where's it gone? Hassett arguments for a rate hike right now and not so strong. There was another one. Hassett indicators point to another strong jobs report. So kind of conflicting slightly. So yeah, Hassett is saying that we're not, or the reasoning for a rate hike isn't as strong as what maybe the markets are expecting, but we are also possibly or likely in for a relatively good day on Thursday for the dollar. So shall we see what is get priced in at the moment? I've not actually checked this week. So July, 70% expectation or probability of a rate hike. September, we're seeing the same thing. It's basically through to 2027. The markets are expecting these rate hikes by the dollar. Sorry, not by the dollar, by the Fed. However, the dollar is kind of flat today. We've seen a rejection around 102, which is actually one of the reasons I closed my euro dollar position. I closed it in a little bit of skepticism around the fact that we had quite a fast, aggressive rally on the dollar. And then we did approach 102, not 1.2. And then we started showing a little bit of a slowdown on the lower timeframes like the H1 and the H4. So I was like, you know what? Euro dollar's a little bit stretched. I think the dollar's a bit stretched. We had a fantastic week. Let's close it and wait for a pullback, which is so far what it looks like we are getting. But how far is this pullback going to follow through? I would kind of expect the dollar to not do too much until we do get the labor data on Thursday. So my expectation really would be kind of range bound in between sort of, let's say 101 to 102. 101 to 102. I would say within this sort of region, the dollar is kind of just going to stay within there. Again, until we get the labor data on Thursday. And that will, I think, respark sentiment within the dollar, confirm future rate hikes, or maybe dampen them, and that we could see some weakness within the dollar. But yeah, we'll have to see. GBP's rising today. Yes, we are seeing sterling relatively strong across the board, mainly due to the fact that we've got what's it called? Some stability optimism is the right word there. Some stability optimism because we do have very high chances that Andy Burnham's going to come in as PM, and also that Ed Miliband is going to be Chancellor. So it's more the fact that we've gone through such a rocky period with, not just Keir Starmer, but obviously the PMs before him. And even when Keir Starmer was in office, and it wasn't, in Downing Street, and it wasn't really a case of everyone wanting him out, but even during that period where it was slightly more stable, we were still losing a lot of people from the Labour Party. Keir Starmer was getting rid of a lot of them. So now we've got an introduction of new people. The markets are now thinking, oh, well, maybe this is more stable, not as much disruption in the political landscape. However, I don't think that's going to be long-lived. I think we're going to have a rinse and repeat of exactly what we've had for the past 10 years. Okay. Barry Allen, I've seen you saying quite a lot in the chat, and I've got to say, I mean this in the nicest way possible. I've got no idea what you're talking about. You say, who trades that? Who trades what? What market are you talking about? COT data? Yeah, we can have a look at the COT data. No problem. There we go. So S&P, Dow, and ZAR are in the lead from last week's positioning. Nikkei and the pound actually quite weak. Other than that, not too much. The dollar saw a little bit of outflow. That's not a huge deal. I would expect that's more a little bit of profit taking rather than it being a severe repositioning. I don't really have an opinion on this. There's nothing that's swaying my opinions or reinforcing anything. It's a relatively neutral COT positioning. And when I say neutral, I mean in terms of what I'm watching and what I'm interested in. Can we check dollar CAD? Yeah, we can check dollar CAD shortly. What else have we got? James would like to know your thoughts on the market reacting to upcoming data. Do you think it could go either way after Warsh conference? Yeah, so it actually kind of just what I said. I think if we do get cooler labor data, it's not going to be detrimental. I don't think that's going to warrant the Fed pivoting dovish, but I think it might see a little bit of a softer tone on the hawkish side. The US dollar or the US heat map, I checked it this morning. I'm fairly sure it was 100. I don't think I've ever seen that before. Let's just double check. Yeah, I mean, look at this. Everything is doing well. There isn't a single bearish reading here for the US dollar. So if we do get unemployment coming out slightly higher and we get NFP coming out slightly lower, obviously that's going to tick down a little bit. But then we can't ignore the fact that we've had good GDP. We've got inflation that's sticky. So I don't think we are going to see the Fed pivot dovish or Warsh pivot dovish if the data comes out slightly worse. But again, it might just dampen expectations slightly. So I wouldn't expect it to be a catalyst for the dollar to completely crumble. But again, maybe some larger pullbacks, a little bit of repositioning, and then continuations. Really depends, but that's my expectation. If it does come out cool. But again, Hassett has said he's expecting it strong. So we'll have to see who's right. I'm just reading your comments just to make sure I'm not skipping anything. Bear with me. Am I still bullish on the Australian dollar? Not really, no. To be honest, I've actually lost interest in the Australian dollar quite significantly. I've not really even paying attention to it these days. Well, actually, the Edge Finder is showing the same thing. It's only 40. I think when I was interested, 2 or 3 months ago, this was like a 60 or 70% reading, maybe sort of around that area. So it was significantly stronger. Since then, yeah, not so much. I'm 65 and very happy when people guess my age at 55. Time flies much faster when you, much faster the older you get. To all you youngsters, make the most of it while you are young. Charles, that's a very nice message. I second that. I'm turning 28 in 9 days. So I feel like I can feel my back getting a bit creaky and sore. Don't trade the dollar. You're going to get volatile tailwinds. Maybe short term, but I think long term, the dollar's actually pretty smooth to trade. I like trading the dollar. James, what's your thoughts on Forex versus futures for prop firms? There isn't a conflicting thing there. They're both different things. So I've got good opinions about both. It's not a case of versus either. I think if you want to position it in a way that you can only trade one hypothetically, it really is a personal decision. So if you're more short term, you've only got maybe an hour on your lunch break, for example, and you can trade New York Open, maybe futures is the best option for you. But if you've got more time, you like doing analysis, you like looking at data, you like looking into economics, and swing trading is probably the way for you, which is obviously more tailored towards FX. Obviously, you can still swing trade futures, but I would say FX is better for that, because really, if you wanted to trade futures, the benefits would be very quick fills, no spreads. So again, it really depends what you're actually wanting to do. Yes, we can check out Australian dollar CAD. My apologies, I completely forgot to do that. First of all, before we do, we need to check what the Edge Finder is saying so we can build our thesis or we can build our direction, which is nothing. So we've got a score. Was it 3? It's glitched. Hold on. Yeah, so -3 on Aussie CAD. So slight bearish tilt, nothing interesting though. Technicals bearish, retail sentiments bearish, and then jobs markets bearish. I don't care about these two. I only pay attention to institutional position and sentiment position by retail if these 3 pillars align. If we don't have the fundamentals to support it, in my opinion, the positioning is pretty meaningless. So with that said, the score is bearish, so I think that's the easiest way to go about this. Very clear support level here. Beyond that, I don't really see anything. I suppose what we would do here, fib from the high to the low, wait for a pullback into around this 50% retracement, go short here, not financial advice. Then when or if price reaches a support level, it would be then really a case of either taking profits here or waiting for a break lower, retest, and then a continuation. That's really all I've got. And again, that, kind of forcing it there, I don't really like the trade. To the moon, you want Nasdaq? Yeah, we could do Nasdaq. So I don't really like the Nasdaq right now. Let me just quickly check something I've got. So I'm conflicted because, excuse me, because the way I trade is kind of multifaceted. I don't know if that's the right word. It's a big word. It's a big word for me. I'm not sure if that's the right term, the right use case for it. But the Edge Finder is giving a very nice risk on sentiment. So, we've got the Dow, the Russell, S&P, Nasdaq, UK 100, very clear risk on theme there. So with the Nasdaq reading bullish here, fundamentally speaking, on just the data aspect, it is bullish. So you would typically want to buy. What's holding me back though is on my notes here. We've got the Nasdaq 100 faces Nasdaq 100 faces collision between hawkish Fed guidance and tech earnings deterioration, offset partially by geopolitical de-escalation. Valuation concerns now center stage as investors punish AI capex spenders while welcoming recipients, compounded by IT consulting weakness, signaling broader demand slowdown. So it kind of depends. If we want to keep it super simple, we just go Edge Finder, look for the trade. That's typically what we want to do anyway. That's a typical workflow most of the guests on here go through, and what I do as well. So I think it's tricky. So the market has reclaimed the 200 moving average on the H4, which is a pretty nice bullish signal. We've rejected the 50 moving average on the daily. We've come down to around the support level here, around 28,800. And we've clearly seen a nice rejection. I think something like this, if we could create another low, either retest the previous low here, just come back into support, whatever it may be, a long position would be warranted, I would say. But I think there are arguments to be cautious, maybe bearish down the line. I'm not bearish, by the way. I'm not saying I want to sell the market just yet. But it's more a case of I do want to be a buyer, but I'm just not confident in the trade, to be honest with you. I think being a buyer is the easiest way to go. Even if we strip back the fundamentals and just look at technicals, I mean, would you really want to sell into this? I think being a buyer kind of is the easiest way to go. So yeah, it's more a case of trying to find an entry, but it is sideways right now. So there's not much I can do. I'd really need to start seeing higher highs getting printed, higher lows. Then I could, draw the fib from the high to the low, from the low to the high, wait for a 50% pullback and then a continuation. So that's my view. Euro pound, if it wicked and hold on, am I reading that right? Euro pound, if it wicked and reintegrate the support, we might look to long. Sorry guys, I am not very good at reading, it appears today. So Euro pound, I don't know, because we're still seeing the same thing. We looked at this one, 1 or 2 weeks ago, and it's not really done anything since that point. We're still on this sort of wedge. I don't trade wedges, but I think it's one of those things. It's so obvious I've got to draw it and pay attention to it in this case. So yes, we're holding this support really well. This is a really strong support, but we are in a bearish trend with these moving averages. We're still creating these lower highs. I'm just not seeing the sentiment here that's wanting to pull this market up. I also don't think there's anything on the Edge Finder for us either. So let's just double check that. Yeah, it's -2. So personally, from a more a bit, what's the right word? Like a deeper look on the economics in the UK, I would want to be long Euro pound, but the price action or the technicals aren't supporting that idea yet. And I don't really have a catalyst to take the trade. So I'm going to have to sit away, but I do like it slightly, but I don't think it's ready. Wash will cut rates eventually. They will eventually crash the markets. They don't care. Maybe. I mean, eventually, of course, they'll cut rates at some point in the future. Who's this guy talking to pointless technicals? That's what I trade, Barry Allen. We go over the fundamentals, we go over the technicals. what do you want me to do? Can you please check all currencies economic heat map? Yes, we can do that. Actually, is there an economic a mass economic heat map? Suppose we could. Oh, right. Okay. Yeah, I'm sure you're talking about these ones. Do you want strength index or surprise index, or the real yield history? Australian dollar CAD. We did discuss Australian dollar CAD, but I don't really have anything either way. I'm not really in favor of buying the Australian dollar. The fundamentals aren't there. I don't really like the Canadian dollar either. I think the Canadian economy is seriously struggling. I think they're actually in a very similar situation to the UK. I think their cost of living is slightly worse, but I think their political landscape is slightly better. But it kind of puts me in the same boat, really. I think the UK and Canada specifically are currency I don't want to hold at all. Hey, James, hope you're having a great day so far. Interested in your opinion on the Nikkei. Yeah, okay. So I quite like the Nikkei, but let me just double check because I've kind of moved on from this trade. We were looking at a gap fill here. I didn't get into this because I was sleeping. It was 11 o'clock at night when this happened, so I couldn't really take the trade. However, let me just take a very quick look because I do have a bullish thesis here. The Nikkei 225 is being driven by a powerful confluence of geopolitical de-escalation and anticipated monetary tightening by the BOJ. That's maybe wrong, actually. I think there might be a bug. The US-Iran peace deal agreement, there's not really much, actually. I think this is more about the US, Iran. So yeah, fundamentally speaking, or geopolitically speaking anyway, maybe slightly bolstered. But yeah, I don't have a really strong thesis. I don't think we do on the Edge Finder either. So Nikkei, yeah, we've got a score of 0 here. So jobs market's okay. Inflation's very bearish. Economic growth is very bullish. So we're actually kind of getting a null signal here. You know, we've got one very bullish, one very bearish. Technicals neutral, COT's neutral. Jobs market slightly bullish, but overall, obviously, we've got this 0 score here. So pretty irrelevant overall. I think, again, on a technical basis, I would want to be a buyer, which is obviously what I was looking at previously. The problem is I cannot seem to get into this trade. I was long at this point here last week, rode this up, then got stopped at break even on the pullback here. And since then, I've been out. So I think really it's more a case of just waiting for a slightly deeper retracement to fill this gap. Then I can get long and just hold the trade. I don't think I want to overcomplicate it too much because, again, higher time frame wise and generally speaking, the Nikkei is just a fantastic buy. You know, keeping it super straightforward. Why is everyone asking for Australian dollar CAD? We did do Australian dollar CAD, but as we found, there's not much there for me. Bashi, good to see you. Glad I'm not burning anymore. Can't handle the 34-degree heat. Yeah, it's slightly better today. It's really humid though. We had thunder yesterday. It was really odd weather. I've just realized I'm actually on a time schedule today. Let me just see who's on next so I don't go over. Okay, so I've got about 5 minutes. Then we've got Ivan coming to take over the show. But until then, we'll continue. Ray Beast, good to see you. Hope you're well. JPY, yay or nay? I think yay, but not yet. So actually, let's take a look at dollar yen while we're talking about yen. I think that's appropriate. So yeah, I'm kind of seeing the same thing we discussed last week. It's a little bit of caution in the market. So I think dollar yen is obviously still buy. You know, it's still a fantastic carry trade. There's no reason necessarily to sell it. I think there was that period, obviously around 160, where a lot of market participants, myself included, I know a couple of other people as well, were going short dollar yen, kind of expecting the same thing that we've had before, where we come up to around 160 and then we get an intervention, which didn't happen. I think the markets now are kind of on caution for when is it going to happen. I think it will happen, but you know, we can't say when. So it's a case of you could buy it here. You know, let's say, wait, hold on, I'm getting all my charts mixed up. There we go. We could buy it here, for example, and maybe it would just continue to rally. Or we could buy it here, and then tomorrow we get an intervention, you stopped out, and you could have just saved money and waited and bought cheaper. So I think that's currently the situation I'm in. I'm not in favor of being a short seller. Let me make that clear. But I don't want to buy here. I would rather wait for an intervention. Again, I could be waiting months, could be waiting a few days. I don't know. But I would rather wait for something like this and look to buy on this 200 moving average on the daily, like has happened in history. So yeah, right now, again, bullish, but can't execute anything. I'm creaky at 29. Oh, back creaky at 29. Yeah. Well, that's what you get for being a being a trader. I'm sat at my desk all day, every day. Sat like a shrimp. Ray, I'm doing well. Thank you very much for asking. Bro, I got cooked on my 10-minute break at work. Oh, Jim, Naz, what are you doing? 10-minute break. How are you getting cooked in the markets in a 10-minute break? What do you do? About to lash out the co-workers. I think you should. You need to release the emotions. So I think actually it might be positive because you might get fired and then you can actually spend more time at the charts. It's a win-win. So semi-selling and software buying. Yeah, I don't even ask me, Ray Beast. I don't know. Not my forte there. Feels like Bank of Japan completely give up. Yeah, well, I don't know. That's the thing. I do not know. I mean, does it matter? Let's say they did give up. We're still going to be waiting. We can't tell. So I'm just happy to sit and wait. Although apparently Ivan called himself the yen man, so he might actually be able to give you a bit more insight than me. The yen isn't something I like to trade. It's actually something I historically really underperform on. I hate the yen. Every time I trade it, I get caught in some ridiculous stuff. So I'm sure Ivan might be able to be a bit more use for you there. Can you do euro dollar? Yeah, absolutely. Euro dollar is still a fantastic short position. My bias hasn't changed in the slightest. As we can see here, very bearish, -15. It's one of the strongest bearish scores or bullish scores as well. One of the strongest scores I've seen on the Edge Finder in probably the past 3 years. It's crazy. So it's still very bearish. So fundamentally, we want to stay short. Swaps, still very, very good for short sellers. Everything is still very supportive. The only thing is I'd just like to see the dollar pull back a little bit more. So we go to the daily time frame. I would like to see, obviously, we've reached sort of this previous high. I'd like to see a pullback, retest these previous highs, and then a continuation higher. That just provides a very simple break, retest, continuation setup. And then we see the same thing here, break, retest, and continuation. Again, super simple, but that's what I want to see. And I think if that does happen, very likely we'll get euro dollar to around 1.15 and then a continuation lower. Am I still bearish on US 30? No, I took a very small loss on US 30 last week. That was just a very small sort of, I don't want to say gamble, but it was just a little bit of a will it happen, won't it happen type trade. Not a huge position at all. But yeah, it didn't work out. Hi, James. Do you do pending orders? Yes, I do pending orders in certain situations like this where I have a very strict entry criteria where it has to come to a certain point. Otherwise, I don't want to be in the position. However, it's not really that often. Normally, I'll just market execute because I'm always at the charts anyway. But I set this on Friday at like 5 p.m. because I was going out for a few drinks. I didn't want to have to watch the charts just in case. So I set the pending order and it's still active. My model has been doing good, up 12% year to date. Ray, I love to hear that. Well done. That's really nice. It's 24 degrees, much better than 34, 35. Yeah, I know. It's a lot nicer. According to EURGP, which is the best one to short? What does that even mean? According to Euro Pound, which one is the best short? Euro Pound? Oh, Euro Dollar, Euro Pound. Okay, I see what you're saying. I think Euro Dollar for sure. So I discussed this yesterday in my Discord, actually. I'm going to keep it really quick. So I've got about 10 seconds. As traders, we've got to make a decision. We've got two really good readings. So pound dollar short or euro dollar short. Obviously here, pound dollar's got a -14, euro dollar's got a -15, but they're still very good. Either is valid. So how do we make the decision? Yes, we can look at technicals, but then if technicals are pretty similar, which they are because they're both very correlated, how do we make the decision? Well, here's a little trick for you. If you've got the Edge Finder, go to macro scanners, go to carry trade scanner, and search up EURUSD or whatever market is you're trying to compare. You'll see, because the ECB's interest rate is 2.15 and the Fed's interest rate is 3.75, we've got a 1.6 divergence. So we get paid to be short. But if we check euro pound, oops, did I type that wrong? GPUSD. There we go. We've got nothing here. So what does that tell you? We get paid to be short euro dollar. So this is the pick, because it's just that slight edge in the favor of the trade. We make a little bit more on the trade. It's just one of those things. As traders, we've got to account for these small things. And especially as you start trading larger size, swaps do become, quite significant. If you make, $300 off swaps, that's a pretty good amount to make off just sitting through a trade because you paid attention to a little bit of detail before you took the position. Do you see what I'm saying? Anyway, ladies and gentlemen, I have to head off because we have the wonderful Ivan coming to take over the show. Guys, don't go anywhere. The show will continue. Stay safe. Don't get margin called. And thank you for being here. I'll see you all tomorrow.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Long time no see. Before I kind of disappeared off the internet, I said dollar strength, then dollar weakness around the new month of July. Maybe I was right. Maybe. I said that here around 14th of June. Either that or 7th of June. So before that, already pre-planned, right? What else did I say? I said that yen is weak. I was worried about Bank Japan. This is way back. And I said yen weakness. So what do we have currently? We have fallen on New Zealand yen. We have fallen on euro yen, reversed. Pound yen has fallen down and reversed. Aussie yen has fallen down, not reversed yet. And CAD yen fell down and now is strengthening again. So the question then becomes, what do we look for? We have seen some interaction with dollar yen around 22nd of June. Doesn't seem to be bothered too much. We continue rising. Am I expecting something happening about 62? Yes. I believe something that should be happening around 162. Not because I'm a wizard, but because it's a round number and they have been here before. So it makes it a bit tricky to be buying into yen pairs. So I'm just going to leave that for a moment. Going back to what I said previously, do I have any charts that support it? Yeah, cool. I think that supports it pretty much. Anyone else? Pound. New Zealand didn't come up. That came down to the level or so I was pointing down to. Dollar Swiss, I don't really trade that much, so fair enough. Okay. Going forward, somebody said to me yesterday that it's not really moving in July or in June last week. Didn't really move. It wasn't really much of a volatility event. And can I say I told you so? That kind of doesn't have the volatility. Yeah, That is normal. That is what I predicted. And that's kind of why somebody said, where have you been? That's where I have been. When there's nothing to do, I'm not here. So, but okay, technically, we have turned around. Cool. And then what about it fundamentally? Can you be dollar bearish when you're fundamentally bullish? And when Edgefinder is currently giving you, euro, dollar is currently negative 15. Can you be a buyer? Oh, so this guy again, Rafael. Yeah, it's me. Thank you. Hello, Mo. Hello, Christian. Have you been under the sun? So can you then be bullish? Current 10-month year seasonality is bullish, but here comes the trick, and here comes the problem that I'm presenting to you, and the conflicting information that I not struggle with, but that's a consideration. The consideration that you currently have is that technically, or flow-wise, I'm saying dollar bullish first week, and then dollar bearish, and then we kind of flat out somewhere between, and we end up with a trend probably lower in euro, but that's not until maybe mid-July or end of July. Between 15th of June, 15th of June, and 15th of July is generally the same price. So if we now are 100 pips or so lower than 17th of June, 200, sorry, or we then like to go back higher. That's at least the theory that I have in my head. And only when bullish support bearish trend turns bullish, which has currently happened, at least on a 1 hour chart. And then I will like, cool, I'll look for it, I'll take it, but is it in line with your normal fundamental? Nope. Is it in line with your normal seasonality? Yes. Is it in line with your normal risk environment? Yeah. But it doesn't fit how we think. So it's a counter trend to your, what do you call, normal. So it goes on the account of counter trend or counter trending your own strategy. Sometimes that works out, sometimes it doesn't. But that you have to have that as a different scorecard. So for me, yeah, in that sense, everything is set up for this one to go higher. When is 1st of July? In a few days, in 2 days or something? Yeah, that could be a nice theory to the upside. It's just short term. And how many pips is it? Is it 200? I don't think so. But if you can get 50 out of it, if you can get 100 out of it, then again, why do I say so long numbers? Because you have to lower expectations for July. You have to expect a day-to-day trade, not a week-to-week trade, because there's no volatility, there's no velocity, there is no other traders out there to push the market. It's just a bit of randomness. Hate trading on my own. Hash, welcome. I'm very, very much a guy to talk to when you feel that way. I am definitely going to be a buddy that you can talk to and ask, do you think this is a good idea or not? And I'll give you my opinion. So that's kind of the theme that I have this week, and then we can put on the indicator on the bullish trend and say, okay, where will we not go above 115? Okay, likely, fair enough. And then that's that. Dollar yen to me should continue higher, unfortunately, until Bank of Japan intervenes. Could be expected around 162. Don't know if they are going to do that, but you kind of have to sit there and be waiting for them. Though that makes it difficult to enter a euro yen trade or a pound yen trade, which I really want to. But at the end of the day, it's the the likeness of them intervening, which is quite high. I don't want to be a part of that kind of scenario and situation. So until now, it's just passed for me. It's gone. It's a perfect setup. It's a great setup here to buy on Sunday. But if this falls 400 pips, I'm not going to be I don't want to be standing in front of that train. So what trades are you interested in the moment? I said euro dollar, bullish. I can say pound dollar bullish, and I can say New Zealand dollar. Now I can see there's a lot of weakness to New Zealand and a lot of weakness to Australia, so they're not currently setting up. I'll leave it to be. There has been, of course, a deterioration in the US-Iran thing. Does it have an importance anymore? Yes, to an extent where those countries' economies are suffering, therefore they have their weakness. So they should benefit when there is hopes and prayers, but less and less and less and less going forward, unfortunately, because now we have to turn into their economies and be like, okay, what is the current affairs? We've been trading what should happen into their current economies. Now we are seeing that they're not doing so well. Okay, that's gonna change interest rates. That's the reality, and we will trade reality when we get deterioration or new trend in reality rather than so. For that, this would be a better short opportunity, but it's not there yet. It's not in the bearish territory, so can't take it, can't do it. Dollar Swiss, same situation as the euro dollar, just the opposite. That's another one for tomorrow. I'm a Tuesday morning London Open bear trader, so this is great up currently. And if it comes up to resistance tomorrow at London, then I'll be happy to do those three. Look into those three at least. And then pound Swissy, also dollar Swissy, sorry, to the downside. Are we going to go into 80-40? Good hope and pray. But as long as it breaks, it has to break 80-60. If it doesn't break the previous low, then I need to be a bit more cautious. British pound dollar shorts. I would argue that's a much better opportunity to do once we have kind of faded the bearishness here. Sorry, bullishness. So that now, yes, we are in a range. I see that we are turning around the dollar. I would rather say, okay, wait a week or two for the dollar weakness to fade away and then turn it higher. And I would wait until like 17th of July or so. Then look for bullishness in dollar. And then pound will turn bearish by itself, or it's already bearish, where it has bearish pressure and becomes a self-fulfilling prophecy. When you have this kind of range, both at the buyer as a seller, horrible to think about any trading here. Yes, it can drop, but it can also rise, and it can peak and then fall. Right here is randomness comes randomness. So me shorting for me right now, technically, not at all in a position to be. I'd rather say it should be turning higher for that matter. But since it's a range or stop doesn't trend, it's out of the picture for me. What else? S&P 500 has come down. I wouldn't say as expected because I didn't say it this time around, but I said that around 1st of June. I want it to be lower 1st of June, came down around 10th of June. Now we have come down again. Now, that is interesting because I wouldn't say it's expected. I wouldn't say I have talked about it a long time, though I have. But I would say, okay, be careful with the lack of a trend. And what generally tends to happen, sometimes, doesn't need to this year, but challenging that low. If that was challenged, I don't know. But later during the summer, we can come lower before turning higher. So what I've seen in this situation just ranges. We can, in some mysterious years, continue higher, but once I see it failing to continue higher in June, and June becoming a negative month overall, I'm a bit more skeptical and that we are going to have a trend at all until August, September. So since we don't have a bullish trend at the moment in this scenario, I'm going to be like, okay, cool, whatever. What happens in July for me might not happen this year, but what generally tends to happen for me is that it just goes up and then it loses power. Goes up, loses power. Goes up, loses power. And then you're like, we were supposed to trend higher. We're supposed to go higher. Why are we lower? Because there is lack of volatility, lack of people trading, because it's just algorithms and computers being put to work. And it doesn't. Last year we did do so, but for me, I'm more in kind of this kind of a scenario where we do trend higher in June, which we didn't this year, and then we can have a deeper and bigger pullback in July, August, and that is the bottom that I want to be catching, rather than trying to force something in June, July, trying to catch the peak and get up before it falls. I rather try to catch the bottom, but that's kind of my expectations. Where once you're already showing me that it's not rising, really proves to me that you're rising. If you're proving to me that you're trying to make a new lower low, I'm not interested in you. What is the support area for TXY? For me, it is 105. I don't want it to break 105, 100.5. Come down to that level, and then it can turn higher for that matter. Yeah, I think it's 105, 100.5. Did I not put 100.5? Yeah, something like that. Something in this direction. Hi, Evan. What does this LT for Aussie look like, please? Arctic Dad. Hi, Vincent. I have missed you so much. Harold has missed you so much. If I can remember correctly, it's bearish on the top of my head. Like, just where is my on the top of my head? Slightly to the bearish side for the summer. That is until August or so. So July, yeah. Any bullishness in July should be faded and bearish until mid-August or so. And then September, depending in September, but at least if you get a high in July, first week or so, then that should be, which I'm trying to be trading this week, is bullishness and bearishness on dollar, and then mid-week, mid-month of July, first or second week, depending. So when I say depending, I mean, I believe it should rise, but I don't know when it's going to peak. So you do technical analysis, you look for a reversal, And then if it happens on a Tuesday or happens on Friday, happens up on a Monday, I don't know. But that's what you're looking for. You wait for it. And once you see it, you look for your entry rules. Then you go ahead. That's the easy part. Because, for example, selling right now, I wouldn't sell us $1 now. But what if, just what, and what about if? What if we are here now and it comes up for whatever the reason is, and you've tried to find a reversal and that year didn't go lower? But if you are somewhere in this situation right now and we can get up to like 14th of July, I said mid-July, look for a reversal, that is a reversal, and then trends are lower. Please get in contact with me. Please get in contact with me. If you have my email somewhere. Ivan at Beetle.no. But or IvanFX at post whatever IvanFX.com. Post or Ivan at IvanFX.com. And I'll get you in. We lost you. So cool. What else? Nasdaq, same situation as S&P for me. Turned higher. Cool. Whatever. Failing to do so shows to me weakness, not push through. Doesn't really bother me. Gold, I said was bullish. I stand by it. It has turned lower because of whatever risk environment and whatever. Cool. Okay. That's the risk we take. That's the fun part about it being this. Is it bullish now? No, not at all. It's fallen a bit, turned a bit low, turned a bit around. Nothing promising. The seasonality for gold during the summer is slightly to the upside, meaning it can lower and then turn higher, and a bit of a ranging, because we see traders parking into gold and go away, or into risk off and then go away. But it's a bit depending on the situation. For example, now we have the war. They won't do it. So we'll have to see if there's an influx, but at least that's the upside direction. If I don't get it, I don't trade. Easy peasy lemon squeezy. If you go to my YouTube channel, there is an email there. So should be easy peasy. British pound, New Zealand. So I'll do that. So gold, if it turns bullish, I'll look to it. Oil, happily to see as it's at 70. Happy to see Brent at 72. I'm just looking at that as risk off, or sort of risk environment indicators, and they're lower. So maybe there's hope. And this also drags inflation lower. So for me, that is great to see. I don't trade it for that matter, but to the lower side, great. British pound, New Zealand going higher. That's definitely a gunner. Not really a reversal, going into a range, and it's just a difference between British pound strength or the weakness in New Zealand. And we are what? What are we? We are 100, 200, 300, 400 pips. Okay. Now also, what can you say? You go, oopsie daisy. We go higher. You find a pullback and you turn higher. Are you shorting it? Whoa. I wouldn't be doing that with the current trend. But if I remember correctly, I'm on seasonality trend. It's supposed to be bearish, and we're supposed to turn bullish. So you are kind of either too early on it, and it will continue higher, or this is the peak. But as we always do, our due diligence first. Okay. Nah, I would pass. But if anything, to the upside. Tell me your strategy, sir. So what I do, I look at fundamentals, I then look at seasonality, I then look at sentiment, and I then look at technicals. So before I even look at the chart, I have a theory. I can also look at Edgefinder before looking at the charts, and then I confirm or deny that we have a trend. So I said $1 earlier. I believe it should go higher this week. I already thought about it. It should be bullish, and it's turning around now and looks great. Fantastic. Of course, my trades are shared in the group, but you know, just dollar Swiss to the lower side. What I don't do is what I really want to do is to do beginning of the trend, beginning of the reversal, like root reversal. That's kind of what I want to do, and then ride for a long time. And you know, sometimes it works out and sometimes it doesn't. But you know, trying to get out and not use too much risk. And what I mean by not use too much risk is less than a percent per trade for myself, and then I take a few trades and then I ride them out for about 300 pips, attemptingly. Sometimes it's 100, sometimes it's 150, sometimes it's 200, sometimes it's 300, sometimes it's 400, sometimes it's 500, depending. I love yen because I understand it. Euro yen is on the move higher. That is great. Dollar yen is on the move higher. Bank Japan is ready to intervene. I am not interested in trying to fight this trend. I want to be with the trend, but currently Bank Japan doesn't like that it's currently going higher. So I'm staying away, but I really, as the yen man, love trading yen when we have a bearish trend waiting for it to turn bullish, like the euro yen has done right now. Advice for best for I cannot give you, because that is so individual. What your risk environment, what your volatility parameters is very individual. But what I can do is everybody to, for example, I'm not saying to trade Bitcoin, but take an asset and you try on your own, not real money, and you see, okay, does this fit me? And then, okay, it doesn't fit you. Okay, then you're trying something else until you have figured out. And what I figured out is your dollar, Aussie dollar, New Zealand dollar are the ones that move the least against the dollar. Pound moves a lot. Dollar CAD never wants to do what I want to do, and dollar yen just does what yen does. So there's different characters, different directions, and different drivers. And then you have to figure out what fits me. What do I understand at the current place and time where I am? And generally, people end up with euro dollar. Looks to be okay, looks to be fine. When you go into risk and go to riskier assets, which is pound and pound yen, pound dollar, pound Swissy, pound New Zealand, you get wicked, you get slapped, you get a 300, 400 pip move. Can you survive that without losing any considerable amount above 1%? Then you have a good risk management. But then that makes you big losses, big wins. And then you dial it down until you figure out that that wasn't for me. I would rather do something else. Then you figure out that the Swiss National Bank actually intervenes with the market, and they can make Swiss go weak all of a sudden out of nowhere, especially if your Swiss is down to 9.92 or lower. So that's like, okay, there is finesse. It's like your wife. You need to really understand your pair, your asset, and your class, and really study it for a considerable amount of time before you figure out, is this something? So I can never tell you what fits for you, because it all depends on you. Because I'm risk averse. I'm like, I wouldn't do your dollar. But for those who really wants the pump and their blood boiling and running, gold is the asset that people choose to, but lose a lot on. So there is that. So, for me, my time seems to be running low. I am happily going to give it over to Alan. So don't run anywhere. Continue on the show. And until next time, boom. Love you.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, good afternoon, everyone. Hope everyone's doing alrighty here today. How was everyone's weekend? Please type that into the chat. I'm curious to know. Let's go ahead and see what's going on here with markets. It's pretty much same old, I would say. I just got a financial juice notification on my phone, and it says suspected yen intervention. So let's look at the dollar yen here, see what's going on, see if it's true or not. Let's go to a 1 minute chart to see. All right, maybe it seems like they've been pretty active here at this level here. This is a 16 pip move, so nothing crazy. Let me see if financial juice is also giving me that notification. Yeah, suspected yen intervention. So we'll see what happens today with that. They did supposedly intervene also before, I want to say it was last Tuesday, maybe, or so. They intervened at the 162 level. So we'll see what happens there. But yeah, ideally, if this thing drops a couple hundred pips or so, I would love to pick it up at some discounted levels. I would say 155 would be like ultimate discount. 158 would be a good spot too as well. So we'll go ahead and see what happens there with dollar yen. Let's actually look at currency strength index here to verify this. So let's look at currency strength. It's not really reflecting here, but this is somewhat delayed here. So if you see this teal line pop up here from way down here, which is the yen is arguably the weakest currency on the day so far. If you see it pop way above here, then it's most likely some kind of artificial strength going in there, and that'll probably lean towards intervention. So we'll see. I'll monitor this one here real quickly. But yeah, so let's go ahead and talk about what's going on. So kind of where I'm at right here with the dollar and everything, and my trading goes is I'm still betting on the dollar. I'm still betting on the dollar. I'm still betting on U.S. stocks. I would say one thing that I'm looking at too is oil as well. If it gets down to this level here, like 65-ish, 66, I'm looking at a possibility of taking a long attempt here, maybe targeting this 200-day moving average as some kind of a ultimate pullback, or even all the way up to here, like in the 80s. Something that I'm looking to do if we go ahead and fill this war gap here, this pre-war pop that we got. The fundamentals on U.S. oil is still looking quite well. If you look here, it's getting a bullish reading of 5. Now you can see here that the daily change, which I love to see, this is brand new here on the Edge Finder. But if you look at the left side of your top tabs page, you can see the 1-day change there. You can actually see if the score has improved or not improved, right? So you can see that oil at one point was a +7 reading, and now it's a 5 because you see this -2 right here. S&P is getting a bump up, the Russell and the Dow. So that's kind of telling me right there that the U.S. equity indexes are actually strengthening in their score, which is really cool to see. And then when it comes to the metals, you can see that silver got a -2, discount, and gold got a -4 discount. So right there, gold was at one point a -10 reading. Now it's a very bearish reading of -14. So this is very, very cool. So yeah, I'm kind of leaning in that direction still. So oil here, I think, is a relative discount, right? I do think that for whatever reason, there's still supply disruptions. It still takes time for all this oil to come back into the market. You do have a lot of output coming in, a lot of efforts in that respect, but you still have, summertime seasonality is a thing. And a lot of countries are going to require oil to get back to normal, right? Especially if they want to fight this inflation certain countries more than others. So I like oil. It's getting a bullish reading on Edge Finder. So I think if it gets somewhere over here, I'll probably take a look at, take it a long attempt there on oil. For metals, one of the biggest things, right? Gold. I was actually a buyer of gold very, momentarily there. However, we did not overcome that 200-day moving average here. And this was also a level of support. And this 200-day moving average is now acting as resistance. So I think that the trend for gold and silver as well is to the downside, as long as you have a hawkish central bank or hawkish central banks in general, restrictive policies, and a strong US dollar. I think that gold continues to flop lower. So it seems like we're just continuing our trend lower, right? This level of support here at 3,900, 4,000 ish is one of the levels here that if you were to get a bounce, this would be it. If it continues to drop lower, then for all my gold shorts out there, this would be just another level where you trail your stops further and trail it into profit and continue going to maybe something like 3,400, right? 3,400, I think, is great value as well. I think at that point, you can start to look for buy opportunities, not even for the short term, but for the long term as well. So I like gold. The bearish reading on Edge Finder is very strong as well. So I do think that it continues lower. Now, will I short gold at this level? That's an interesting question. I think I might. It really depends, right? So for me to see this level fail and give me an idea to go ahead and short or an opportunity to short, I would need to see yields higher, which we're not seeing that quite yet. You can see here that the US 10-year yield, this was kind of like this upward trend line here that we're seeing. Now, you can update this however you want, right? So trend lines are subjective, but you're kind of seeing this general upward trend here in yields for the US 10-year specifically, though right now they're kind of weakening at the moment. So unless you see a pop in yields and a strong dollar, then I probably wouldn't chase this price. If I don't see that, if I still see yields continuing lower, the dollar lower, then I would just let this play out. And I would rather just be patient for buy opportunities for the long term at some more discounted levels. I hope that makes sense. So if you're seeing oil and yields in the dollar not as strong, then I would just be patient and buy the dip. Versus if you see oil, dollar, and yields moving higher aggressively, then I would short this. Does that make sense here? So I kind of need for all stars to be aligned for this trade to work out. Now, this is only because I'm not in gold at the moment, so I would be entering at this current price right now. But, if I was filled somewhere above here, short side, then different story. I would just trail and let the trade do its thing and breathe. So that's kind of my thought process on gold. Similar situation for silver as well. Now, silver, you are kind of getting to this lower end wedge here for support. So we'll go ahead and see if this breaks lower. If this actually breaks lower, then this could actually look very, very bad for silver. I think, my personal opinion on silver, guys, I think that there's a lot of room to go if the technicals confirm it. And what I mean by that is if we go to a 12-month chart, you can see here that this is only the start of what could be a longer term funk for silver, right? You can see here that we had this big pop there in the 80s. We continued higher and then this big red candle. And then for a long time after that, it was just kind of slow and steady drift downwards. Same thing here in 2011, 2010, pop there. Then you had a funk for silver. Now, here in 2026, same situation, right? You had a humongous pop. It was up like 140% or something outrageous. And now you're starting to see this all, retrace here. And I think that if you finish this month or this yearly candle like this, I think that the trend continues lower for silver. So it's kind of my thought process there. So, and if that's the case, that'll also trickle into metals as well, right? If you're getting just restrictive policy out of all of the global central banks, that is very much a possibility for the metals to act that way. So something that's on my radar there. But again, for gold, I'm looking to, buy at some longer term discounted levels, I would say. Now for the dollar, right? I'm still kind of bullish dollar here until proven otherwise. So what I would look for is a retracement to the 38.2 or the 50% retracement on the DXY. We did tap into this level of resistance here at 102. So that seems to be like the next zone here that the dollar was kind of going towards. Maybe you got some profit taking. Maybe you have a mixture of, the market is kind of digesting the rate hikes, maybe dialing some of that back there. I do think that fundamentally, if you still get a pullback to the 38.2 or the 50% retracement, I think that this level of support here or this level of resistance could turn into support and you can continue trading higher. Maybe the new range that we operate under is from 100.5 to 100.2. right? So maybe you can just play the range bound here until fundamentals change and either we break higher or lower, one or the other. But that's kind of what I'm looking for on DXY. So a pullback into here would be wise, in my opinion, for a longer opportunity. I'm watching that by looking at euro dollar specifically. So I do like euro dollar here to the short side. 38.2 seems good. We did kind of get close to it there on Friday. Then we were, we traced lower there. So I'm looking to go ahead and participate with euro dollar short. Again, the edge finder is pointing in that direction of a minus 15 bearish score. Very bearish score there, the weakest score out of all of them. So I do like that. Pound dollar is also a good one there for all the people that are, trading pound. Very, very good opportunity, I would say, too. You are getting a bounce off of this level of support here. So if you do get a pullback into, let's say, 30.2, you're pretty close there, or the 50 or the 61.8. I like that even better, I would say. 61.8 and 50% retracement level kind of lines up with this low or this level right here. So I would think that's a pretty good opportunity there. And then you can continue short and you can target this level of support here where we're getting a bounce at currently, or below. If you break this level, trail stops and then just trail it lower. So that's kind of what's going on there with the pound. But for now, now that it's kind of just in the middle here in between these two levels, I would kind of just stay away from it and just wait for something to play out, whether we reach the zone here or you get deeper into here. That's what I would do with the pound. Kiwi dollar is pretty weak here. We did kind of just fall right through this level here where that 200-day moving average is. It was acting as support at one point. Now looking at resistance, probably going to hit this level 0.555. And then from there, it's just a matter of, does this level hold again or do we fall right through it? I don't know, right? It really, really depends on what the dollar's doing, what central banks are doing, all that good stuff. And as far as central banks and all that, we are going to have a Warsh speech here on Wednesday, which is going to be very interesting. I'm curious to see what happens there. I know he's no longer going to be given forward guidance, which is going to be tricky to navigate. Usually, us traders have been pretty much handheld, right, as far as what's going to happen next with rates and all this good stuff. So seems like it's going to be more of a data dependent kind of thing. So yeah, I'm curious to see what happens there. We also do have ISM manufacturing, which is going to be a good intel for the growth story in the US. It is looking to decline from previous numbers. So that's kind of interesting, right? Also, too, non-farm payrolls is supposed to get weaker than last time, which is another interesting thing, right? So maybe today or this week, I would say, maybe you get some updated numbers out of the US that are not, in line with this mega strength that we're seeing, right? So another thing to be mindful of as well. So, that's kind of the dilemma that you have to face when you're kind of trading price at this, very mature trend when price is already moved, is that, you get this overcrowdedness and any miss of expectations can really disrupt the trade. So that's why you have to proceed, in my personal opinion, with lower size. I would very, very much advise that if you are not in this trend here and you are chasing like myself, right? I already took profits. I got in somewhere above here. I took profits here. And now I'm just waiting for a re-entry because this trade is already very mature. It's already moving. It's already developed and it's probably crowded by now. You have to proceed with lower risk size because at this point in time, if you get any kind of missed expectations, then the trade reverses and then you're really screwed, right? So if you have a big size in the trade, it's gonna wipe out pretty much all the gains that you have already made in the previous, right? So kind of what I'm looking to do here with euro dollar. Aussie dollar too looks kind of weak as well. I'm looking at this level here, that 200-day moving average and this level of support as well. So this is like a good level here. Maybe you do get some weakening US data here. And coincidentally, you have the Australian dollar here bounce off of that 200-day moving average and we continue higher. That's also a possibility. So you got to be mindful of both sides of the coin. So if you continue to see strong US fundamentals, I like euro dollar to the downside. If you start to see some weak fundamentals, I kind of like Aussie dollar to the upside. Now, recently, the Australian dollar fundamentals haven't been the best, but when you look at rates as a whole from a holistic view, let's go to economic data. Let's go to interest rates data, and let's look at the US versus Australia here. You can see that Australia has this beat at the moment. Australia there in red has higher rates than the US. And when it comes to their inflation data, you can also see that we are at 4.2 and Australia is at 4%. Oh, so they're actually improving. Okay, that changes things actually. I thought they were still elevated. Okay, that changes things a lot, I would say. Okay, so what can I trade the dollar with if you start to see dollar weakness? Let's see. Let's go to macro. Let's go to equal surprise index. Hey Marco, how you doing?
Oh, hello. I
How
was
are
just looking at some charts and whistling.
you? You're whistling. You were singing a song back there.
Yeah, yeah. So how are you?
I'm good, man. So I'm trying to figure out. I was mistaken. So I thought Australia still had elevated inflation. It seems like their numbers are actually kind of trending lower. So this is Australia here. They kind of topped up at 4.6, and then they're trending lower there. So I'm trying to see if you do get some missed expectations in the US, because you do have war speaking here, right? So maybe he's hawkish, maybe he's dovish. We don't know. You do have ISM manufacturing that's looking to trend lower. So we previously was 54, and now we're looking at 53.7. Still expansionary, still above 50, but again, market operates under mixed expectations versus reality, right? And then non-farm payrolls is also looking to trickle down lower. So I know what I want to do if you get strong US data. It's the same trade as always, long dollar. But now I'm trying to look at what I would do if you get missed US expectations. What would be the next strongest currency to trade against the dollar? I thought it was Australia because their inflation was higher than ours and their rates are higher than ours. But it seems like they're improving on the inflation front. So I'm going to go to Eco Surprise Index, or sorry, Eco Strength Index, and see what I could find.
Well, the yen is not bad.
Yeah, the yen is not bad. The yen is not bad, actually.
Did we get some breaking news on that?
Yeah, we got some this morning, like just when I first started here, suspected yen intervention. Let me go back to the chart and see what it's looking like. It's still flat, so nothing much has changed. This white line that I have, this is a line from the previous high in 2024, which is basically at 162. So we're right at that line.
Yep.
I think the next best thing would be the yen, honestly, Marco. So Eco Strength Index, the yen is the next best one here. If you go to Eco Surprise Index, the yen is also getting 100% or like beating their expectations there.
Yeah.
Let me look at global yields. Global yields, if we look at that, okay, pound is trending lower, Australia is trending lower, US is trending, well, I don't know, this is kind of getting a bump here. Canada's trending lower. Canada's been weak for a while. Europe is kind of getting a pop here, and Japan is kind of flat, but so Australia is definitely not what I would trade it against. So I'm going to take that away. Canada, definitely not. The pound, maybe. I think Japan would probably be the next best thing. The only thing is that it's tricky, right? Because the tricky thing is timing this intervention thing.
Yep.
But maybe it's just the timing of it, right? Maybe the timing is coincidental. I don't know. What do you think? What would you think, Marco, if you were to short the dollar, what would you short it against? Or would you not even look at Forex, and would you look at other things like bonds or oil? That's another question too, right?
So I have a short on USD JPY. I have a long position on GU, and USD MXN is not a bad opportunity because seasonality is very, very bearish for the dollar against the Mexican. What is it? MXN, Mexican peso? Okay, yeah. So that one is not bad either. I don't think it's on the Edge Finder, but I saw it from Brent Donnelly in his newsletter. Essentially, so that would be kind of the three best positions for me personally at the moment. And I'm kind of expecting we get a bit of a weaker NFP print on Friday. So let me just show you something on the Edge Finder.
Let me show you this real quick too. Rabies brings up a good point. So Rabies, thank you for bringing this up to my attention as well. So I was under the impression that Australia still has that elevated inflation problem. I know they're not as aggressive as they once were, similar to RB and Z, but look at this. Rabies says, I don't agree much, Alan. Institutions have been lowering longs on Australian dollar due to the less hawkish RBA. And look at this. So COT data history for Australian dollar. You can see that the yellow line here is just dropping off significantly here. If you look at the net
That
changes
is correct.
here, the recent
Yep.
ones, pretty bad. So actually, you know what? While I'm doing this, let me look at the yen real quick, and then Marco, I'll let you show me what you wanted to show
Yep,
me.
sure.
Yen,
Well,
similar
the yen is
situation
trickling
though,
lower.
kind of trading lower.
What about the pound?
Yeah, let's look at the pound. Pound as well.
Okay, not the best
Euro.
story.
Euro's flat. So
Mhm.
maybe the euro is the one that leads. The Canadian dollar, yeah, the Canadian dollar makes sense. Let's look at
And what about the
Kiwi.
dollar? It's probably going up.
Yeah, the dollar I would imagine is
I
going
mean, something
up.
must be going up. So I'm guessing it's the dollar.
Yeah, it's the dollar.
Yeah. Yep.
So maybe the play is not currencies then. Maybe the play, if you want to go against the dollar, would probably let's look at gold. Gold's, I mean, it's consistent, you know, has consistent
I
demand.
don't know. Maybe yields.
Bonds are offloading, which is yields higher. That makes sense.
Mhm.
Swiss franc, flat. What am I missing? Am I missing on currency pair? I went Kiwi, yen, pound, euro, CAD. Huh.
Maybe the Swiss.
This is the Swiss.
This is the Swiss. Okay,
This
super
is flat.
Yep. Well, I'm guessing whatever you do, the edge is not going to come from the COTS data history. Because,
yeah, I think you have to be a little bit proactive and jump the gun on something before it shows.
Yeah.
Okay, go ahead, Marco. Go ahead and do your thing. Show me what you were going to show me.
Yep, sure. So let's put my screen. Let's go to Edge Finder. So if we go to the NFP for the US, go to labor NFP, and we go to the last, let's say the last 2 years. What you will notice lately, in the past 12 months, the prints have been kind of on the lower side. So you had 73, 22, 128, 50, 130, minus 92. And then the last 3 ones were pretty high, but kind of the average is not super high. If you look at the last 12 months, the average is not really super high. And the unemployment rate for the US didn't really come down that much. So what I'm seeing and what I'm reading online is maybe some of the latest prints on the NFP were a bit over exaggerated. So like 178, 115, 172, and maybe we could get a print like 30, 40, maybe 50K, something like this, let's say. And that kind of spooks the market, and that creates a dovish Fed, a dovish environment. So that's what would work for my positioning on on Thursday, if the NFP comes out a bit lower than expected. And if you just look at the 12-month average, you would expect a bit of a weaker print. But as far as I can understand, so you're mostly positioned, or you want to be positioned long USD, you're just looking for a hedge to be prepared if the data comes out weak. Or?
Yeah, so I definitely want to be prepared for either or. Like right now, the easy trade or the obvious trade is long dollar, but you know, looking at like what you mentioned here as well, and you can see it on Forex Factory that, you know, the ISM number is supposed to weaken. The INFP report is also supposed to weaken as well. We don't know what Warsh is going to say. So I'm kind of, you know, trying to be proactive here and be prepared for what I would do in the event that the dollar story weakens a little bit. And you know, markets trade in themes, and I want to be aware of what the next theme could possibly be.
Yeah.
So
I think sorry, go ahead.
So maybe the yen is probably the next best thing I would say, especially if you're getting chatter about intervention. Now, the only thing with this is like, if you get a weakening dollar, I think the weakness will be best reflected on the yen. Then you also have intervention as well. But it's also a tricky trade, because if you're wrong, you will definitely be wrong. You know, it's going to suck to sit in that trade. So I like the yen story. I want to be prepared and find at least one other trade setup as well. Rabies brings up a good point, and you've said this too, Marco, but you know, the UK was hurting for their fundamental data, but also just the political uncertainty that they're facing. Starmer has since stepped down, and you have someone else, which I think he's very pro crypto and stuff, very conscious of the markets. maybe that is fuel for the pound. But again, the pound story, if you go to let's go to Eco Surprise, the pound, where is it? It's still missing most of their data expectations. So I would need to see a little bit more from the pound. I would need to see more data coming in, good for that. What do we have? We have Bailey speaking on Wednesday, and that's it. Let me filter to orange too as well. Let me see if we have anything. Yeah, the pound's calendar is pretty limited. It's just Bailey talking. So
yeah. So the pound did catch a bid last week and today a little bit, but that could be just the optimism around the new political situation. So it really isn't in the numbers, let's say, but it's also about, I believe, the dollar weakness. So the expected dollar weakness that I'm personally expecting. Can you go back to the currency strength chart?
Yeah, so it was where's it? Right here. This is it. So it was the yen, the weakest link, and now Australian dollar is falling off significantly here. The yen is getting a little bit of a bump here. It's still way down here. And you have the pound, which is the strongest one. The pound is the strongest with the euro second. So I think if you were to get dollar weakness, like it'll probably reflect everywhere. You know what I mean?
Absolutely.
So
absolutely.
I think the pound might be the benefactor there. We'll see. So something I need to definitely touch on. But right now, like when it comes to the technical picture for the pound dollar, you are at this level of support here. And so if you continue to see dollar weakness, I think the pound, given that the political uncertainty has been lifted, today it's the strongest link out of all of them. Maybe this is good value. So we'll go ahead and see. So in that event, if you are looking to hedge or be proactive and be prepared for the event that the dollar trade is starting to fade off here, I think pound long would be good. I think dollar yen short would be good as well. But again, you would kind of need to ride the wave of the bank or the MOF or MOU that's looking to go ahead and intervene with this. But it's kind of the only two that I got. I don't like Aussie long like I thought I did. Though technically it looks attractive because this was resistance here many, many times, support here as well. You have the 200-day moving average as well. So we'll go ahead and see. I think if I'm speaking out loud here and you just get general broader dollar weakness, I think the best play would be what chart looks the best technically.
I think GU. Because of the level of support. Yeah. Because it bounced off, I think, 4 times already off that level of support. So it's not bad. And the seasonality with USD-MXN, like the most bearish month for the dollar Mexican peso is July, I believe. So that could be another case. Are you flat at the moment? So fully flat as far as positions go?
Fully flat, yeah. So I was looking to short euro dollar. I made a video on Friday before the week ended, and I was kind of basically going over kind of what to do when you want to re-enter this trade. This is the dollar long trade that I've been following for a while. But what to do when you're kind of entering when you're flat and you're trying to re-enter when the trend is pretty much matured. So right here when you're kind of chasing, basically the approach would be just to lower your size significantly because you're at this point you're chasing price. But I'm also open, right? I'm also open to the idea of going short the dollar if it makes sense, if you're starting to see the picture weaken. One thing too that kind of helps the story in your case, Marco, 10-year yield, look at that. It's continuing to drop here. Similar with the 2-year yield as well here. So I would say this is a trend line that I would follow or look at here, just broader upward trend. If you start to see it break down similar to the 10-year, then that's good for that, pound long story.
Let me just show you something on Twitter. So let me try to find it. Give me 1 second.
A says, what are your thoughts on Kiwi dollar? Kiwi dollar was at one point, they got superly surprised hawkish, but then they walked it back entirely. So I think that Kiwi dollar. Oh, go ahead.
No, you finished. You finish.
I think that Kiwi dollar here has the next level of support, which is all the way down here at 0.555 or 56-ish, somewhere around here. And from there, it's just a matter of, do we continue range, this range bound motion? So it seems like most of the technical pairs, or from a technical basis, most of these major currency pairs are lining up at these important levels. So Kiwi dollar getting very close to this level of support, pound dollar is in this level of support, euro dollar is in this level of support, Australian dollars in this level of support. So it seems like, if you were to get broader dollar weakness, it's just a matter of like which one is the next best thing, and then longing that. But go ahead, Marco. I'm sorry.
Yeah, no worries. So this is what I wanted to show you. So this is what the markets have priced in as far as the future rate for the, I guess, the 1 year, 2 year, 5 year, 10 year, 30 year. And you can see how we had the spike. So this is 2026. We had the spike in March because of the Middle East stuff. And then the market started to price in even lower rates than before the conflict. So right now we're back almost to between 2% and 2.5%. So that's what the market is currently thinking as far as pricing in rates. They're saying lower rates. So they're being dovish. Is that going to happen? Don't know, but it's a clue. It's a clue. So I'm also seeing that we had some attacks on Friday after the market closed. Markets open today. There wasn't much movement as far as a risk-off move. So I'm guessing the markets are putting that whole Middle East conflict behind us, and expecting maybe that the inflation goes back down to some lower levels, which again plays with all of the technical levels, which plays with the dollar losing value, and it aligns the fundamentals with the technicals, I would say.
Did you see all the memes, Marco, on how Trump reacts on Friday, 4:59 p.m. versus 5 p.m.? There was some chit chatter on. There was essentially, I don't know if this is confirmed or not. This is all speculation, but there was an attack that was done on Iran from the U.S. that was done like in the early afternoon on Friday, but they held back, publishing that until the market closed.
They didn't want to spook the markets.
Yeah, man. That's like the environment that we're in right now. But yeah, I think like you said, like the markets are just front running the idea that it's over with. And my favorite meme was the one where Trump gets the barrel, or Michael Jackson gets the barrel and just lowers it slowly, it's pointing at you. My favorite one. Yeah.
I saw a meme like 5 p.m. or 5:01 war on, and then like Sunday, midnight war off.
Fantastic progress we have made. Fantastic.
So he just escalates on the weekends when the markets are closed, because, well, he's definitely insider trading, because we saw his reports from I think he needed to do a report of his stock positions, and you can see how his buys coincided with his speeches where he says, "Oh, I love Marvel," or some stock, and then it explodes, and then he makes money, and it's crazy.
Yeah, man. Presidents make bank. They may not make bank on the salary. I think the salary is like $300K or something like that, but they make bank, I tell you.
You know what's funny? Just quickly. So Trump was supposed to be the crypto president, right? And Bitcoin did only bearish price action after Trump was elected. So like it only went down from the point when he stepped into office. So I thought that was pretty funny that everyone was hyped up that Trump was going to make Bitcoin go to, I don't know, 200, 300K. And he actually made it go, or he didn't make it, but the markets made it go down to 60K. So that's usually how it goes. When everyone thinks it's going up, it goes down.
Nick says that a lot in his videos. I've heard it consistently, but people make investing decisions based off of political views.
Yep,
and that just never works, man. It just never works, right? Like, right now one could make the argument, if they're not happy with this administration, that it's the worst thing ever. But then look at all this, right? Like this, we are seeing some crazy movement here in the stock market.
Absolutely.
But I'll go ahead and pivot out there, Marco. Thank you so much for the conversation. I'm looking forward to the next ones. And it seems like we may start to see a little bit of a flip in the dollar. So congratulations on being early there on that pound dollar long. So I hope it works out. and I'll be looking to join you if you start to see more signs in that direction.
Yeah, makes sense to me at the moment. So I'll try to put on the position, or I have put on the position, and of course limited the risk. So yeah, let's see what happens. Well, thanks for the conversation. We'll see each other tomorrow, and I wish you a great rest of your day.
All right, man. Take it easy, man. You too. Bye-bye.
Yep. See you. Goodbye. Okay, let's continue with the regularly scheduled program. I do want to mention the sponsor of today's video, which is Ola Prime. So if you are looking to get funded, Ola Prime is 35% off with the code A1 Live. Okay. Now, if you take a look at Ola Prime Trustpilot, the score is 4.5. So I would say that's pretty high when it comes to prop firms. 4.5, and they're like getting, I don't know, 50 or maybe 100 reviews every 2 weeks, which is pretty good. So you're getting a direct feedback from their users. So they're growing exponentially. Now, my usual advice is avoid a new prop firm, but I would say there are a lot of green flags with this one, which is a really good score in Trustpilot. Most of the prop firms have a score around 3 to 3.5. It's reviewed by Deloitte, which is a plus. And they don't have a consistency rule on some of the account types. So the consistency rule is pretty bad for swing traders. It can definitely break a strategy or break your patience, let's say. Ola Prime doesn't have it. And with the code A1 Live, you get 35% off. So it's absolutely the best price in the market. Yeah, link is in the description. Do take a look if you are interested. As far as my positions go, I'm short USD JPY. Basically planning to catch an intervention. We haven't yet hit 162, have we? No, we haven't. I think 162 is a good round number to get the drop. So maybe it happens at 162. So I'm playing this. It is getting expensive. I'm not going to lie. I am paying negative swaps, and it's pretty hefty, but I'm going to hang in there because I think the reward is worth the risk. I'm also in a buy position on GBP USD. This one is working a bit better. This one is actually in profit. So I'm liking this position a lot. This, of course, was a signal in the A1 Trading Discord. So if you want to join the Discord, there is a link in the description. And you can use the code Marco to get... So code Marco gets you 25% off. If you want to join me, trade with me, get all of my signals. It's not just me. It's Nick, Alan, Iwind, Chris Pulver. So in my opinion, is the best trading Discord out there. You know, I've been in this space for 5 years, 6 years. I've seen a lot of Discords, and this one is definitely the best. So not just because of the mentors, but because of the actual traders in there that are real traders, profitable traders, getting payouts from prop firms. So they can really help you as well as the mentors. I have the Nikkei on the watch list. Let's look at the top setups page for the Nikkei. I would like to get into the Nikkei. So let's take a look. This is a problem. So neutral score at the moment, score of 0. I'm not sure what dropped. So it was bullish on Friday. I didn't want to get in late on a Friday, so I stayed out. I have to follow the plan, of course. Do we have the delta somewhere? Well, something changed. Something definitely changed in the numbers. Yeah, something definitely changed in the numbers. So at the moment, I'm not looking to buy the Nikkei because it's neutral. If it flips to bullish, I will take a buy position. But I'm keeping it on the watch list because, in my opinion, it is the best index at the moment. It's moving the best, looks the healthiest. S&P and the Nas, they're blue on the day, which is good to see, but they are below the 20 MA, which is not so great. The S&P is more in a consolidation phase, and the Nikkei is definitely above the 20, and it's in a nice uptrend. Let's look at the Russell. So small caps. Russell is doing fine. I would say the Russell looks better than the S&P. Would you agree? I would say so. Yeah. So the Nikkei is still my favorite index. I still think Japanese companies are massively undervalued. And I think the Nikkei will keep on outperforming the United States for this year, maybe even the next year. So I'm looking to play that. As far as some other things on the list, Brent back to pre-war levels, which personally I like. In terms of gas prices, if you went to fill up your car, and if you live in Europe, you've probably seen a cheaper price at the gas station, especially diesel. I know gasoline was already falling, but diesel was still staying a bit expensive. So now it's going back to the pre-war level, which is definitely good to see. You have to note that there are midterms in November. So US midterms 2026, November 3rd. Trump definitely doesn't want to go into the midterms with oil being high, inflation being high, inflation CPI. So inflation being above target, he definitely does not want to see that. And also, he doesn't want to escalate with Iran too much. Maybe a strike here and there, but not a massive escalation, because it definitely lowers the odds of his team being reelected on the midterms. It's important. What does Trump like? He likes power, he likes money, he likes being popular, and he likes to get his ass kissed. He gets all of that if he stays in power, but not just him, his team as well, because the president is only as powerful as the team, such as the Republicans. So Trump is going to do everything he can. In my opinion, he's going to do everything he can to win as much seats. I think it's seats in that election. Okay. Which should be bullish for stocks. Absolutely. One thing that Trump likes to track is the stock market. So let's go to the stock market. He uses the stock market as a scorecard, and he thinks, which he's right, that people will vote for him if he keeps stocks bullish, right? Because a lot of very wealthy people, powerful people that donate to political causes, they hold a lot of stocks. So if the stocks are going up, they're going to support that specific president. It does make sense. So I like the bullish stock story. Personally, I'm playing it through some individual stocks. So I have CAT, which is Caterpillar. I have GH, which is Guardian Health. I have BRKR. And I'm looking at some other stuff. So let me see some breakouts. What do we have? Okay, we're getting some breakouts here. Yeah, this is just an experimental strategy. So these are not signals. I'm just forward testing a strategy. If it's successful, I will, of course, start posting those trades as well. But for now, I'm only putting out the most quality stuff, which is, for example, the dollar yen short, the GU buy position, and a possible Nikkei long as well. Okay. So I have 2 more minutes. Let's take a look at gold. I know a lot of you love to see gold. So gold, very, very popular subject at the moment. I tested a video. Nick actually gave me the insight. I tested a video without mentioning gold and with mentioning gold. The video where I talked about gold did 10 times better than the video where I talked about, I don't know, pound USD. So you guys, for some reason, love to see gold, which is totally fine. But you're out of luck because gold right now is pretty tricky. I wouldn't sell it. I wouldn't buy it here. Personally, I'm more bullish than bearish. So because I'm bearish on the dollar, because I'm bullish on stocks, because I believe the Fed will be dovish, that whole story fundamentally is bullish gold. But for me to become bullish, I would need to see us reclaim the 200 EMA. Okay. So I would need to see us reclaim the 200 EMA, go above the 20 EMA, and then I'm going to consider some buy setups. Of course, going with the edge finder. Oh, always, right? So I need a bullish print on gold, which right now I think it's bearish. Actually, very bearish. So I need this to flip bullish. I need the chart to go above the 200, and then it's going to be game on. Now it's in no man's zone or no man's land. For all of the gold traders out there, I would recommend looking at different things. Okay, it's silly to just focus on one asset. You need to expand your approach. Otherwise, you will be sitting on your hands for months, or you'll keep on trading gold and you'll blow your account. So that's about it for me. From me. Thank you very much for watching. You can catch me tomorrow. I'll be streaming pretty much every single day with Alan. So yeah, you can catch me tomorrow. I wish you good luck in the markets. And if you want to trade with me, join the A1 Discord. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live. That's A1Live for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Monday. Hope y'all had a wonderful, relaxing weekend, had a pool party, and finally finished off my cell phone. It's completely destroyed. Dropped it one too many times, so I have to go get a new one as soon as I finish my stream, just so I can get back right with the world. I dropped it in my parking lot several times over the last year, and I just never got a new protective case for it, and so I just finally dropped it one time too many. So off to get a new expensive phone. It's all good. I needed a new one anyway. I think I've had that one for about 8 years. So anyway, that's my story for the day. Just a quick recap. I'm sure the gents have already mentioned this, but Thursday, Friday, obviously Iran had the attack on the Singaporean cargo ship named MV Everlovely. That was the name of the ship. I thought that was an interesting touch. With the drone, of course. That was Thursday, Friday. Friday, Saturday, the U.S. responded with an airstrike on missile and drone storage sites, as well as coastal radar installations. Iran retaliated with strikes after that on Bahrain and Kuwait. So Saturday, Sunday, no new strikes. Both sides agreed to a stand-down de-escalation, paving the way for Doha talks on Tuesday. So there you go. Your normal, like the gents said earlier, your normal weekend nonsense, only to come out on Monday with something positive. So that's where we stand. We've seen this story before, have we not? Something about the weekends that they like to get frisky, only to calm it down during the week. So anyway, that was kind of the update of that. So I told you guys the other day I was I got stopped out of that footsie trade. I'm still in it. I told you guys that I'm still in it on my third account. So we got real close to this the stop loss here. And I got to be honest with you guys, and I was joking with the guys about it the other day. When I got in that same trade over here on Trade Locker with my other two accounts, I had a brain frizzle and I put the stop loss in the wrong spot. So I should be in this trade still on the other two accounts, but I'm not because I missed the correct spot. Okay. Over there, I actually put my stop loss about like right here to where it did get tapped. I just messed it up. But hey, the cool thing is I'm still in it on this account. Letting it go. You guys see I still have that take profit up here at the top. It's just a 2-to-1. It's just a very simple 2-to-1. But we're going to let it go. Got a nice bounce from that point, some higher highs and lows. So I like it. we're just going to let it go and do its thing. So it's going to be kind of funny if I profit on this one and lose on the other two on the very same trade. So that's an update of my footsie trade. Still in that pound dollar short, which was that one I told you guys I had to make just to appease the 30-day rule. So we have gotten a little higher up. And I told you guys on pound dollar, if we go a little bit higher up, then I might be interested in adding to that position. So let me go find pound dollar over here. We're in that area now. If we go to a 4-hour chart, or actually this was the 8-hour, now that I remember. Okay, this was the 8-hour supply here, followed by a 15-minute smaller time frame supply, kind of nestled towards the top of this area. Talking about this 15-minute zone here. Really nice candle out, nice volume. I mean, I like it, and that's literally where we're at. So at this point, I'm basically just waiting on an hourly close on this candle, guys. We got a 200 EMA that's gotten touched inside of this zone structure. So again, I'm just waiting on a bearish candle. If we get a bearish candle on this, a bearish 1-hour close, I might end up adding to this position. So we'll see how that goes. I'll let you guys know tomorrow if I do end up adding to it. Just enough to get back to the equivalence of the 0.3% risk, guys. That's all I'm after. Remember, I just did what did I say the other day, 0.15 or 0.10%, something like that. So I'll just go do the math and make sure I keep my stop loss up here above this swing high, just to keep it safe in case this 8-hour 15 doesn't hold, or just in case it kind of peaks through the top. But at the end of the day, 50 EMA on the execution time frame is below the 200, and we have pierced the 200. And actually need to double check. Okay, so we're not quite to the 80 level yet on the RSI. So that would be the only thing. It just depends. I don't know if we'll get quite up there or not. That may have a lot. I mean, it's close enough. Look, RSI for me it doesn't have to get to 80 exactly. If it's 78, 79, that's close enough. You guys know 70-30 is the RSI. I just like to see it at 80. Again, I like those more extreme readings. So we'll just let it go. We'll let it do its thing. Pound dollar is still obviously getting a hell of a bearish score over here. So is euro dollar, gold, silver, Aussie dollar, Kiwi dollar. So that's going to be some of the stronger assets. Obviously, the dollar is nothing but strong. And that's part of the reason why you're seeing gold and silver bearish, because the dollar is so strong. So when it comes to gold and silver, just go flip over to that for you guys real quick, as far as supply and demand areas. So if you guys remember, if we go back to a 4-hour chart, I was keeping an eye originally on this supply zone confluence up here, but it did catch a bounce off of this zone structure here. Okay, so that was more of the minor structure that I was watching, and I was considering it, but I just was trying to be cute and wait for a little bit higher of a price level. I just felt like this swing high, swing low, I felt as if the banks would probably have wanted to attack that area too, just to get a little bit higher of a price before they do short, but it caught this supply zone area down here. And I think that's the zone that Nick took, if I'm not mistaken, or this general area when he took his short. So guess what? Now we're kind of doing the same thing, okay? We have a new daily 4-hour confluence, which is where I have my alert, but we have another zone below it. And so far, that's the one kind of catching a bounce to the downside. So is this going to be an absolute repeat of this situation up here where I'm waiting on the higher price, but the lower price wins out? Quite possibly. Okay, look, at the end of the day, I'm gonna stick with it just because I personally have found so much more success on the daily 4-hour confluence. I know I tell you guys that quite a bit. So that's why I'm still waiting on this area. But if it catches this bounce here and continues to drop, it wouldn't surprise me the least little bit, because at the end of the day, I've already seen this movie up here, right? So yeah, I'm going to stick with this. Now, again, it may very well work out. And if it does, say la vie, okay? I don't want to break my personal set of rules just to try to catch a few points. So, but yeah, gold, silver weakness because the dollar is so strong. Guys, let me know in the chat if you have any other tickers you'd like me to bump to the front of the list. I'll definitely jump on those for you. But the COT report, it did give some more bearish love to the gold and silver as well. I do believe, yeah, silver were minus 0.77, Gold is a minus 1.35%. So not quite the -2 or lower levels that I personally like to see, but it is still bearish nevertheless, going along with the bearish fundamentals and everything else, not to mention the technicals. So yeah, definitely still liking the gold and the silver shorts. It just depends for me if we just get that little extra bit of a push up to follow this red projection line, guys. That's what I'm after. If I get involved with shorting some gold. So we'll just let her go, let it do its thing. Silver has the very same minor supply zone right here after we did break through this major demand area. But the same thing, we kind of have a daily 4 hour just a little bit higher up. So it's just basically dangling a carrot on a stick for me saying, hey, this is where you really want to go, even though I really want to go just a little higher. So I'm going to stick with it, guys. We'll see who wins in the end. But that's going to be my status on silver as far as supply zones. Okay. And having a look over here again at the surprise index, dollar and the yen are stuck at the top, partying in the sky. Like I mentioned to you guys last week, there was a little bit of suspected intervention just a little while ago. Let's go have a look at dollar yen. We finally crossed into 1986 territory. There we go. There's that white line I told you guys. Anything higher than that would have been higher than the 2024 highs. And we just barely peaked in for 2 minutes, technically 3 minutes. And that's where it looks to me like we might have had a little bit of Bank of Japan intervention. Big 1 minute spike on the volume spread analysis. Big push down, gigantic push down. But just like we've been talking about for probably a couple months at this point, every time they've intervened, the bulls have stepped in and basically retraced it. So it's not quite retraced yet, but I'm just going to continue to stick with this, just like the yellow arrow shows there. And if we can get a break and close up here, then I might be looking for a retracement to a newly created demand zone for possible buys. I just don't see anything right here in this immediate area just yet. So it's not really looking that great. Ultimately, I do still have this zone all the way down here at the, what is that, the 160.34 level, $4 yen that I'm keeping my eyes on for possible buys. So there's really a couple plays from here. Depending on the speed at which this thing retraces, I may or may not still be interested in this area, but would really like to see a new demand zone created up here. But hey, I'll take what it gives me. It would be a little higher on the curve if I do try to buy up here. This would definitely be lower on the curve, which would be more of a discount area as far as a buy. So still need to see a little more information, but it is just, like I said, just interesting to see that we have touched 1986. So that is the dollar yen for you. And it is obviously still giving us a bullish +8 score over here. Dollar, I think, got sold off just a little bit, if I remember right, going back to the COT report. Is that right? Did I see that earlier? Yeah, minus 1.8%. So not quite the minus 2%. I still kind of consider that neutral, but close enough, guys. So, and then the yen, yeah, pretty well neutral. So almost no movement really on the yen when we're doing the math on this thing. So the biggest winners, though, was S&P, the Dow. As far as currencies go, the Kiwi was increased. Now the Kiwi is still heavily net short. Okay, so if we're just looking at the 8 major currencies for the moment, yes, it was the biggest winner. I say that with an asterisk because it's not like it was super big, but yeah, it's still net short. Okay, it's down here with the Swissy if we're just looking at overall positioning. So that's, I don't know that that's a whole lot to make me really that excited about it, but it's just kind of there. What's more interesting is the bearish side of things, where the banks sold off some of these other currencies, like the British pound, 5.25%, we'll call it. Okay, that was the biggest loser, which matches well with the pound dollar short. Okay, the one that I'm still in, the one that I may possibly add to at the bottom of this, or at the top of this hour, which literally we have a minute left. So I'll take a look at that here again here in a minute, but Aussie dollar is on the list, but remember, dollar sold off a little bit as well. So it's just a little bit of mixed signaling with the dollar. We're trying to buy dollar, but yet the bank sold off the dollar just a little bit. So that's just kind of a little bit of a look from that point of view. Going back to the top setups. Let me make sure my chat is working over here. Might have to refresh my thing. Just make sure I don't miss you guys over here. But anyway, so yeah, I wanted to take a look at a couple of these indices, the Dow and the S&P as well. Come on. All right, guys, I'm trying to get my thing over here to work. Oh my gosh. I swear YouTube has like 3 commercials anymore between videos. It's the most ridiculous thing ever. Might have to upgrade premium. I don't know. We'll figure it out. All right. Dollar's still at the top. Dow is up there as well. So let's go have a look at a couple of these indices real quick, see what we got going on. As far as the Dow, we already know daily is up pretty strongly when we're looking at highs and lows, higher highs, higher lows. The EMA structure, the 8 above the 21, alligator's mouth pointing to the upside. We are at the top of the curve. Okay. So that's just one thing to note. But at least over here on the Dow, we've continued to make higher highs and higher lows. Whereas if you guys have been paying attention to the S&P and the Nasdaq, you can see it's kind of leveled off a little bit. Leveled off a little bit. Probably a lot of that due to the tech, right? The tech. SPCE or SPCX, as you guys remember, we talked about last week, down quite substantially all the way back to the beginning since their initial liftoff. And yeah, currently at 155. So basically back to where we started when they released back on Friday the 12th. So that's part of the reason right there, okay, that we're probably seeing some pullbacks in some of these indices. But anyway, just to go back to the Dow, since that's the one that I've got interest in, go 4 hour over here. So if I'm just kind of looking at taking a step back at the bigger picture, yeah, I still like, if we happen to somehow make it down here and Edgefinder's still giving us a nice bullish score, I still like that 50,400 level. I just really like this zone of demand down here because that's really kind of the liftoff point. And it's just below the 61.8 as well, as far as the fib retracements. That I just still think this is the best one. Now, you know, yes, we could mess around down here in some smaller time frames. I just feel like it's high on the curve. And I just don't like trading high on the curve like this, guys. Now, you guys remember, I might have drawn this with you guys last week. We did have a 5-minute zone right here that technically got pushed, technically got touched, and then ran off for what would have been a pretty decent profit. I avoided that. In hindsight, I was the most interested, if I go to a 1 chart look for you guys, I was the most interested in this little dinky 5-minute zone down here for a while. But once price moved away like it did here, that's really kind of where I personally just kind of lost interest in it. Because any big retracements is pretty much fighting the trend at this point, and didn't matter because we bounced into that zone anyway, and we've lifted off ever since. So I say all that to say, guys, this is just too congested for me. This is kind of that equilibrium that I talk about, the fair market value. If you just take a big step back and look at the last week, the last 2 weeks of candles, well, that's pretty much an equilibrium point. So anytime I can buy undervalue, that's what I want to do. And that's why I'm sticking with the 4 hour. But because it is so strong on the edge fighter, we may not even have a chance. It may just continue up. And we've already kind of got that wick above, but without any real close right here. So I'm going to keep my curve analysis where it's at. Swing low, swing high, just because we didn't get this close. And I'm just going to stick with this. Okay? I'm going to stick with this. So that's the Dow. That's where I'm interested in. We also saw S&P up there. And it... So for the higher context, we did get the daily demand bounce right here. We bounced up, but then we bounced into this daily supply. And that by bouncing into that daily supply, it just made me a little more hesitant about buying into a smaller time frame demand. And that was a 4 hour. So that's daily supply. This is 4 hour demand. Daily is typically going to be stronger than a 4 hour. It did offer a good discount, but I just didn't quite like the structure, guys. Now, you know, if I'm looking at confirmation entries, well, perhaps we could find a second chance by breaking and closing above this structure here. Here, let me move that. Break above that structure and then retrace. And maybe we could take a chance and find another second chance opportunity. So I don't know. Let's look in this area right here for a 1 hour and see if there's anything decent. Yeah, I can tell you right now there's not, because there's no volume down here. Little blue candles on these legs out. That's not attractive at all on a 1 hour. Yeah, 15 minutes, same thing. So yeah, same thing rings true for me for the S&P. I need to find something better. It's either going to have to create a new zone on the way up, make a newer series of higher highs and higher lows. Actually, that's probably the only thing I'd be interested in, to be honest with you, because again, we did not break the structure on S&P and Nasdaq. We didn't obey what I was looking for, which was breaking the structure. Break structure and then close, and this would have been a different story. But because we didn't, because this daily supply caught it and pushed price back down, that's why I've lost interest in the 4 hour. Again, daily typically is always going to be stronger than a 4 hour. So it could very easily push it all the way through. So, yeah, I'll just have to reevaluate S&P at some point. Again, Nasdaq, same thing. We didn't really break this overhead structure here. That was technically a 4 hour supply zone right here that did actually catch price and push it down. So yes, we have hit the equivalent demand zone like we did over here on S&P, but I'm sticking with the Dow because over here, at least we've broken structures to the upside. And yes, I will keep an eye on this zone down here, despite it being higher up on the curve. I just won't be interested in a full risk. Okay. Talking about this zone down here. This one's already old news. It's already been mitigated. Okay. It's not fresh, so I don't want to touch it. I will see, even though it is a dinky 5-minute zone, I'll see if we could possibly get a bounce out of this. And the reason is, and the only reason is because of how much volume we had take place on that Tuesday morning intraday session open. Big red candles, 5-minute chart. Yeah, absolutely. There's probably going to be some unfilled order potential left there that also broke structure. Okay. So going to keep an eye on it. But this is a partial risk. The deeper zone is more of a full risk. So that's kind of where I stand on this. In no way, shape, or form will I ever do a full risk when it's this high on the curve. The major time frames, the higher time frames. Okay, swing low, swing high. So that's the indices for you. I do believe we got Bitcoin on the list as well. Bitcoin and oil are kind of doing the similar story to me, meaning they're both bullish, but they're going backwards. Okay, the trend is down. So if we go to the daily on the right, you can see we got lower lows, lower highs on Bitcoin. I told you guys for a while about that monthly, weekly, daily demand zone. We've already had the move pretty much take place right here, and it just could not break through this 4 hour supply zone over here, which I told you guys back then. If we got a break and close, I would have been interested in buying down in this area somewhere. We just never got it. So really, I at this point just want to see it start a new series of higher highs and higher lows. And this same story is true for oil, which we'll get to in just a second. But I really need to start seeing a series of higher highs and higher lows for me to have any interest in trying to buy. It would be nice to see it break this structure here. Now I know it's a mitigated supply zone, but I still would like to see it break this area and then retrace for a demand. So nothing to do with it right now. On that note, oil, again, it's kind of giving that same picture, guys. We're almost to pre-war lows. We still have a little bit of a gap to fill here, and then a possible bounce from a demand. So same thing is true here. I need to see a series of higher highs and higher lows after we bounce into that daily for me to have any interest, as long as EdgeFinder is still on the bullish side at that point, to go long. But it wouldn't shock me at all if we come down here and just chill and go sideways for a while. Okay. So we'll see. Obviously, you had the strikes over the weekend, or I should say Friday. You had the immediate, okay, let's go meet in Doha. So we didn't really get a big spike in oil or the dollar index for that matter. Because again, it's like we've mentioned before. It seems like everybody's kind of has war fatigue. Screw it, we'll stick with the data, which is the way I like to trade anyway. Going by the data, the hard data over here. But anyway, dollar, we did get obviously close to that daily supply last week. And yeah, hey, despite the Thursday, Friday strikes, we didn't get a big spike, did we? So there you go. People are just not caring anymore about this stuff. So yeah, so the next major potential bounce point for the Dixie is still pretty deep down here at 99.80. Get back to 100, touch it. Maybe we could reevaluate for more longs because we are pretty pricey at the moment. Pretty pricey. And we still got a lot of zone to break through if we're going to get through this major overhead supply. So, yeah, at this point, I'm just going to stick with the data, stick with the pound dollar short. And, yeah, like I said, see about possibly adding on to it and just let the UK do its thing. So, okay, got a few minutes left. Let me see what you guys wrote over here. UJ, 169, 161.9 to 162. Let's go back over here to the dollar yen for you again real quick. Dollar yen, dollar yen, dollar yen. So you're going for 162. Let's see. Yeah, we're close. That would obviously be the major psychological number there. Yeah, you got a lot of money. You got a lot of forces at work here. You got a lot of intervention traders. You got a lot of people hanging on the side of the data. The dollar is very strong, but the yen is very strong when it comes to just the fundamentals, as we saw over here. Okay, so there's just a lot of forces. I think we're going to get a big pop at some point. I just have no idea which way it's going to go, whether it's going to go up or down, right? All I can say is, depending on what it does is going to dictate what I do. Again, if we get a push up and close, perhaps if we do get a big pop up, okay, where the bulls win and the intervention traders lose again, like they have been losing, okay, then maybe we get a retracement somewhere in a new demand zone here. But there's also the zone I showed earlier. So yeah, it's just in a weird spot. Would you guys agree? Can anybody put their life savings on the line and say this is absolutely getting intervened down a lot, or this is absolutely blowing to the top? Is anybody here willing to bet their life savings on that? Probably not. Which monitor do you use? Dennis says, which monitor do you use as it is able to give clear view of the markets and data? Which monitor do I use? You mean like which time frames do I use? I don't know what you mean by which monitor. Yeah, I always have a daily on the right. I have to see the big picture over here. Sometimes I'll flip it to the weekly if I don't see a great picture on the daily. I'll flip to the weekly. But yeah, daily on the right, 4 hour on the left, guys. This is my starting point. Now, when I find my demand zones on daily and 4 hour, remember I want to fine tune it. So I'll go down to a 1 hour to make sure that the 200 EMA is near that zone I want to buy. Okay. Sometimes it's the 1 hour, sometimes it's the 4 hour. It really just kind of depends. Is that what you meant? Let me know what you meant by that, by the monitor. Anton says Bitcoin and oil of independent correlation. Yeah, Bitcoin normally follows the indices, guys. But if you do a correlation coefficient check on a monthly chart for let's do this. Let's go S&P, and then we'll type in Bitcoin. Let's see here. I need to go find my correlation coefficient chart here. We'll put this on Bitcoin. You guys will see what I'm talking about. I don't think I've showed you guys this yet. Apply. In general, now this isn't 100% true all the time, but in general, this is a lot closer to the 1 level. So 1 means they are fully correlated. 0 means they're not correlated at all. -1 means they're negatively correlated. So in general, you see it's pretty close to the 1 level. And over the last few months, we've now dropped into the negative territory. So it's kind of hard to make that judgment right now on, and there you go. There's the Nasdaq with Bitcoin underneath. Okay. And it's a negative number. Here's the Dow, negative number. So, from time to time, guys, it's just important to to add on this CC indicator. Again, it's correlation coefficient. Now I was looking at it on a monthly time frame just because I want to see the big picture. But yeah, sometimes that's true, sometimes it ain't. So right now, there's not really a big correlation there. To 160, yeah. Yeah, okay, 162 or higher to 165 long forecast. When it comes to dollar yen, if we continue higher, I know I mentioned this a time or two to you guys. Let me go back. If we keep chewing through this, we have a little bit of monthly. I don't know if I would want to call this a monthly supply or not, because it does have a big wick. But if you go above that 175 level, and I know that's a long ways away, you got a waterfall. You don't have a whole lot of resistance standing in the way, I don't think. This thing, it wouldn't shock me at all if we blitz through that. We see 240. Now that's crazy. I don't think the Bank of Japan would allow it, but if you're just isolating a chart and you're just isolating the data as it stands right now, quite possible. We've seen crazier things. But yeah, 165. Yeah, I mean, yeah, that's fine. That's why I say I don't know. You know, it's okay to say I don't know. I don't want to, none of us want to be up here and be 100% adamant that this is going to happen or that's going to happen. All I know is, depending on what price action does, is going to dictate what I do, right? Drop into demand, great. Might look for a buy. Break, close, high up, retrace, find a new zone, great. I'll buy from that point. As far as going against the data, though, and, you know, following the intervention, I'm just personally not interested in it, because I've seen all the times that they have intervened in the past, only for it to get bought back up again. It's not like this is the first time. We've seen this picture before. And even right now, okay, breaking into 1986 territory. Yeah, we had that, what looks like an intervention move, but we've already pretty much retraced a lot of it, right? So BOJ's having a problem trying to stabilize the value of the yen. And I just personally don't want any part of the intervention plays, just because of the movies that we've already watched in the past. So anyway, guys, it's already the end of my shift here. Again, I'm going to take a deeper look at pound dollar, see if I want to add to that short here in a minute. The FTSE trade is still on. Going to let it do its thing, and we'll check back in tomorrow. I'm going to go get me a new cell phone, guys. Take care. Stay safe.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.